So hopefully you should now be starting to get somewhat comfortable, with the previous concepts we were looking at with advanced market structure. So looking at those differences between swing, internal, and fractal structure. Now, the concept of order flow, you'll see as we go through this lesson, but it essentially is pretty much the exact same thing in the way in which we've been viewing price action through that lens of market structure. But now we're basically going to be viewing the market the exact same way, but viewing it through the lens of supply and demand, right? So you've got market structure and then you've got supply and demand. But what you'll see is that basically the exact same concept, or they're two different methods for getting at the same point and viewing the market the same way, right? Now, so let me just kind of talking about that and throwing all these fluffy words out there. Let's just dive into this theory lesson. And as we go layer by layer, you'll start to see how they basically are the same thing, okay? So this basic order flow, you should be quite familiar with this from the initial supply and demand module earlier in the course, right? When we went through the theory of that, what do we know about price? We know that price can form a range, right? It can just be moving up and down, and then let's say price then breaks out of that range to the upside, okay? So this is our basic idea of how we form a demand range, right? How demand comes into the market. We have price kind of, at equal fair value, and then there's an overwhelming imbalance between demand and supply, where demand then overpowers supply and takes control, right? And then typically we'll see price pull back. It will then fill up more of those orders, right? Typically known as a mitigation, right? Traders mitigate those orders, and then we continue to the upside, right? So the very, very basic premise, you may have heard of this kind of phrase before, some people like to use it, is you have a range, it initiates out of that range, then you have a mitigation, continuation. So range, initiation, mitigation, continuation. It's just a very, very, way of just saying price initiates out, demand steps into the market, price comes back to fill up more orders, and then continues on to the upside, right? So hopefully you guys should be pretty familiar with that. In terms of how a demand range would work in terms of candlesticks, right? Let's say this was the M15 chart and you have a bit of an M15 range, you've got multiple candles, and then you see price go out. If you were to then look at this section of price action here on the 4-hour chart, what would that be? It would likely be only one or maybe two candles, right? And then you'd see one big engulfing 4-hour candle come out of that, right? And that would give you your 4-hour pivot, single candle demand zone, right? And then price would push back in. But if you were to go and investigate that bearish 4-hour candle that's then engulfed by the bullish 4-hour candle on a lower time frame, on the M15, for example, you would see potentially a bit more of a range, or maybe on the M5 or the M1, right? So on and so forth. This M1 range here, and you see a big swing push out on the M1 and come back in. What's that going to be on, say, the M5 or the M15? It's probably going to be one or two candles, a big bullish engulfing candle, and then a swing pullback, right? That's the fractal nature of the market. So that's kind of a quick crash course refresher on very, very basic supply and demand, right? How we visualize that on a chart. So the exact opposite for supply, right? You have a range, and depending on which way price breaks out, it just determines whether it's demand or supply. Obviously, if it goes to the upside, then we have demand. And if it comes to the downside, then that's where supply has taken control. So we get that initiation out of the range, mitigation of the range. Think of it as just picking up more orders where that supply stepped into the market. And then this is obviously where we want to then get in to try and catch that next movement to the downside, to catch that continuation. Okay, cool. Pretty simple stuff, right? Hopefully. Again, another simple concept, but you need to nail this, right? Basic order flow. When we have bullish order flow, the exact same thing with structure. We make a series of higher highs, higher lows, higher highs, higher lows, higher highs. Now, each of those pullbacks, right, whether it's a swing pullback, whether it's an internal pullback, whatever, it's just price pulling back. That, when it then breaks the high, that whole sell to buy range, right, from the high to the low, essentially that green box, is demand, right? If it breaks to the upside, that's your demand area. That's your demand range. So anywhere within that box is where you have your demand range. Price then can pull back, doesn't have to, right? Price never has to do anything, but price can then pull back to do what? To mitigate that range. So we have a range, price initiates out of that range, then we get the mitigation of the range, and then what do we get? We get the continuation. Range, initiation, mitigation, continuation, right? Pretty basic stuff, hopefully. So that's what you'll typically see when you have nice, efficient bullish order flow, is you'll see price move up, it'll come back and mitigate that range, move up, come back and mitigate that range. Now, as you guys should hopefully, again, be very, very familiar with and comfortable with, is, we understand these larger ranges, but we want to be a bit more accurate with our price action. And that's why we look for smaller pivot demand zones within within those ranges, right? To try and time catching those high lows a little bit more accurately, rather than just entering on the entire range, right? Where risk reward would not be on our side. So in terms of how you would draw these in a market, you literally, just very simply draw it from the high to the low and then drag it across to where price breaks, right? So if it was the opposite, if it's supply, then you drag it from the low to the high, or the high, it doesn't really matter what order you do it in, but you drag it across to where it breaks. So obviously, if price breaks out of the range to the downside, it's then a red box, it's supply. If price breaks the upside, then it's a green box, it's demand. There's not really too much else to say to this other than that we just expect order flow to continue, right? Price will come back and mitigate it, and it will continue to make those higher highs and higher lows. Likewise here, right? We have price breaks structure to the downside, it breaks out of that range, price then pulls back to fill up more of that supply and then continue to the downside. Right, so when you have a continued and sustained order flow, if it's bearish order flow, then each range is respected. So can you see how this is exactly the same way we view market structure? It's the same concept, because what do we expect with market structure? If this high breaks the low, right, then that is a strong high, and we expect that price will pull back, but it will not breach that high. So that's the exact same thing as saying, if the bearish order flow is going to continue, we expect that this range here that I'm dragging across, it will not be breached. Price will not trade higher than it, will not spike higher than it, right? If bearish order flow is to continue, right? So it's the exact same thing, but we're just drawing on these pretty boxes to visualize how it's supply in this instance, right? But they're the same thing, right? Hopefully you guys can see that now. So yeah, very simple rule. I just want you to know at this point is if the order flow is going to continue, right, each range will be respected until it's not. And then obviously if price breaks up, then what do we have? Then we have, that one drag across for me. Then we have bullish order flow, right, starting to sustain, and then so on and so forth. So you can see how this relates to the previous thing we were looking in advanced market structure, whereby once we get that bullish IBOS to the upside, or it could obviously be a swing boss, whatever you want to use, right, then we would expect that bullish order flow to continue until it doesn't. It's the exact same thing here, but we're just visualizing it with supply and demand. Okay, cool. I think we should all be getting that. So now, here's a little bit more of an not advanced, but just kind of the next aspect to that. So this is exactly what we were just looking at here, right, in terms of order flow, except we're zooming into this box just here, right? So sometimes, when you get a very, very large impulsive swing movement like this and there was no real pullback, when we then do get the pullback, we can be in a much larger swing range, right? So within that, we can get a lot of internal price action, which we've just been looking at, right, in the previous module. So let's break this down from an order flow perspective. Now, first, just look and cast your mind on the biggest swing. So we're just going to look at the swing highs and lows, right? So we get a swing movement up, we get a swing pullback, we then get a swing break of structure. So then all of this is basically just one big swing pullback, right? And then we get another swing break of structure. And then again, what do? We pull back and then we move up, right? Super, super simple. So what happened in terms of order flow just with that larger swing structure? Well, when we got that break of structure to the upside, all right, I'll get rid of the orange line. From the high across, right, that here is your swing demand range, right? From this swing high to the swing low, that is your swing demand range. So what happens? Price comes in to mitigate that swing demand range, form a swing high or low, and then continue the next movement to the upside. So then that gives us this larger swing range, right? From the swing high, like this is how you would draw it. You would go from here, you would draw it from the swing high down to the swing low, right? And then just drag it across to where price breaks it. And that is your swing demand range of this current range in the middle. And then the exact same thing, right? We get from the high to the low to where it breaks, and then that's your next demand range. So what would we expect? We would expect the next swing pullback to mitigate something within this demand range and then continue up, okay? Hopefully you guys should be comfortable with that. Now, like I was saying, sometimes we can get big swing ranges, and this is where we've been diving into how we can be a bit more accurate with the internal structure within that. So after we have a swing break of structure, what do we expect? We expect a swing pullback, okay? So when we have that internal structure and it's giving us a series of internal lower lows and lower highs, right? So we get a bearish internal break of structure. What did we then expect when we were looking, when we were talking about the advanced market structure? We'd expect that to continue, right, until it pulls back. So we get that internal bearish order flow denoted by these red ranges, right? That's where each range is respected until what? Until it isn't, until we then get a bullish internal break of structure. So at this point here, now what has happened? Now, price has mitigated some refined demand within the previous swing range, right? So this is when we're first expecting that swing high low could be formed. We then get a bullish internal break of structure to the upside to form a bullish internal higher high. So now the order flow, you see these series of red ranges, the supply ranges has now switched to bullish. So now we have this new range, this internal demand range, right, from the low to the high, to drag it across the way it breaks. And now we can look for what? Now we can look for those internal higher highs and higher lows, which we expect to continue until it takes out the week high. So this is exactly what we were just looking at before in the advanced market structure. We have the bearish internal structure, which we're now also referring to as bearish internal order flow. That then gets disrupted as we get a bullish internal breaker structure to the upside, right? So if you, like me, you want to see a candle closure for this, and then price pulls back in to form a internal higher low, respecting this new demand range, right? Because now demand is in control. The internal demand or the internal structure is now aligned with the swing structure. They are both bullish. The internal order flow is now bullish, right? In line with the overall swing, bullish order flow. So now we're ready to do what? To take out that week high. And that's it. And then we expect those demand ranges to be respected until that high goes. Okay. And then the exact same thing would happen again. We'd come in to mitigate this larger swing range to form that higher low. And then we can look, for those same internal structures within there to happen, or we can dig down into a lower time frame, right? So yeah, that's pretty much it. The only other thing I forgot to say was that when we have this bearish order flow here and we're pulling back, right, and then we mitigate something, some demand within here that then leads to the bullish internal breaker structure. The internal structure is then aligned with the swing structure, and we now have bullish order flow started to kick in. The bearish order flow has now been disrupted and has ended. Now these previous highs here become what? They are simply becoming liquidity to fuel this move here. They're like, think of them as liquidity targets. So if you're long, you can potentially target these for partials, because after we get those sweep of those highs, right, that facilitates a pullback. So like we get a break of that high, facilitates the pullback, right? We get a break of that high, and then potentially we'd pull back. So the way you want to view that essentially is, because all of these ranges have been mitigated, so price comes down, mitigates the prior range. Price comes down, it mitigates the prior range. Price comes down, and then we get the bullish shift in order flow, then we mitigate the demand range, right? So for price to pull back and mitigate this demand range, not always, but it's very likely it's going to have, mitigated some supply within here. But you have to understand that if the internal structure is bullish, if the order flow is now bullish, the internal order flow, especially when it's aligned with the overall bullish swing, if you're shorting from this supply, your expectation of how far that bearish move is going to go is it's just to facilitate that bearish internal pullback, right? We are not expecting this low to go, because this is now a strong internal low. Why is this a strong internal low? Well, because it took out the high, and now this we expect to be just a pullback to mitigate some demand within here. So you can short from these old supply zones that are going to be, potentially nested within here. Just draw it on, right? Over here. There'll be another one here. And again, you can short it, but you have to manage your expectation of what are you expecting this this old supply zone to achieve. We're just expecting it to facilitate a pullback into this current active demand range, right? And then we want to look to catch that strong high low to target the weak internal high. So again, it's all the same concepts we've been using the whole time. Nothing has changed. We're just kind of packaging them together in a more cohesive, advanced way. It's the exact same thing. Strong highs and strong lows, looking for breaks of structure, but we're just detailing into it and diving into it a little bit deeper, right? So once we get that first shift in internal structure, so it shifts bullish, so the order flow then shifts bullish, how you want to then interpret these prior ranges, as these ones have already been mitigated, is now think of it as like the majority of the supply in each of these swing ranges has been filled. So there will, of course, will still be some left, because like I just said, there will be maybe some unmitigated pivot zones, right? But you just want to view those, just draw on properly. You just want to view those at this point now as just providing pullbacks into these strong protected internal higher lows, right? So now at this point, when this breaks upside, this will be a strong protected internal low, right? So price is just going to pull back if it comes off some old supply here, right? So the way you can also think about it is that because these supply ranges have been mitigated, there will be less supply within them, like the majority of the supply has been used up. So now this gives you it allows price to move easier to the upside. Think of it that way. There's less supply here to contain price. So now there's a bit more of a free path for it to continue up to the upside. And that's really it. Hopefully you guys should be quite familiar with this, or at least comfortable with it if you've spent time really understanding the prior concepts on advanced market structure. So let's take a look at one last theoretical example for this lesson. Right. So at first it can look like there's a lot going on, but we're just going to go through it nice and slowly. And I can promise you it's not. In fact, this is exactly the same as the example we just looked at, except we're just zooming in a little bit more into one of these bearish swing ranges. That's the only difference. Okay. So let's go through it again. Swing high, low, swing higher, high, right? So we get that swing break of structure. What do we expect after a swing break of structure? We expect a swing pullback. It doesn't have to, but it's most likely that that pullback is going to come down to at least the previous swing demand range, right? This green box. That's where typically we would expect price to pull back to, but it does not have to, especially if price is impulsive, right? We could just get that. But for keeping it simple, right, this is what we expect. And when price pulls back down into this demand range, that's when it's higher probability to then be looking for longs, right? And of course, if we're looking at actual supply and demand zones within that, we'd be looking for refined pivot zones, et cetera, et cetera. But for now, let's just focus on the ranges, right? Because we're looking at the overall order flow. So we have a swing break of structure, we're expecting a swing pullback. So if we then look at the internal structure, what do we expect? We expect that bearish internal structure to be forming with those internal breaks of structure to facilitate that overall swing pullback. Now, as we, let's get rid of those orange lines, as we start to come into that previous swing range, we have to start being aware, especially now we're in the discount, et cetera, that there's an increased probability that the swing high low is about to form, right? And obviously swing structure is the most powerful, that's going to take precedence. On this one time frame. So we have to start being aware that bullish pressure could be coming in, and we may want to start looking for longs, right, to try and catch that swing high low, right? So that's what we have to be aware in the back of our mind as soon as price enters the swing range. So typically what would we look for when we get that swing pullback? We would look for a bullish change of character to give us a signal that that swing high low may be in place. But now, we have a bit of a deeper understanding, right? And we now know that a fractal break of structure, so a chalk, this little break here, that is just the first signal that we're getting the internal pullback, right? So it's an aggressive signal that the swing high low may be in place, but really all it really confirms is that we're getting this movement. So we're getting the lower low, the lower high, and then that's one internal push down. But when we get that little chalk, all that means really is just confirmation that we're getting this internal pullback up to this protected internal high. Right, so for now, just think of the internal trend, this orange line here. We just have the larger internal trend, which is bearish, right? We come into the prior swing demand range, so we know there's an increased probability that we could be getting that next swing run. We get a little bit of a bullish change of character, so that's a sign that may be happening, but really the way we interpret that now is it's just to facilitate an internal pullback, and it's likely this strong protected internal lower high will not be breached. So we're just expecting this movement up here to then continue the overall bearish trend, right? That's the expectation. Okay. Now, within that overall larger pullback, right, especially if it's large price action, what are we going to get? We're going to get potentially like the internal of the internal price action that we're looking at, right? And you can get little bullish order flow within that. So it's only once then this low then goes, that then what can we know? That then that lower high, that new lower high is going to be in place, that new internal lower high. And once that breaks and then that bullish order flow shifts to bearish order flow, right? Now we can target that weak low because it failed to take out the high, right? So that's the internal range we were within, the larger internal range, right? We've got a bullish change of character here, which disrupts this little supply range here. So never get rid of all these lines. That little bullish shock there gives us what? It gives us a small internal demand range. Price then comes in and mitigates it. Exact same thing. Price comes in and mitigates it. Price comes in and mitigates the prior range. Price then continues up, and then we get a shift from that bullish order flow, that small internal order flow, to that small bearish internal order flow, right? And we expect that as price comes in towards that protected larger internal high, then that gives us good confirmation that this is in play. And now this becomes sort of that higher probability move if you want to play that next larger internal leg to the downside, because now the small internal structure is aligned with the larger internal structure, right? So we now have small bearish internal order flow, which is aligned with the overall larger bearish internal order flow to now catch that next movement down. So now we can target here, right? So hopefully that makes a lot of sense. But of course you have to be aware that, it's still, we have to be aware of the bigger picture, and this could be the swing high low, right? And we could break up to the upside. But it's only once you get that high going, right, the actual IBOS, that then we have that stronger confirmation of that swing high low in place. So hopefully you can kind of see how all of these things relate, right? Don't forget we have the larger big swing structure with the higher high, the higher low, and the higher high. And then we have the slightly larger internal structure, right? Where it's making those lower lows, lower high, lower low, lower high, lower low. And then within that reg, right, you can have then the small internal structure, right? And you just help that to help you understand what's going on with this leg. And then once that small internal structure shifts, then we know we've got that, right? And we expect, once that low goes, what do we expect? We expect that small internal bearish order flow to keep continuing until the low goes, right? Imagine if it didn't, and then imagine if we broke up here, well, then we'd expect this small internal high to be run, right? You guys should hopefully be very, very familiar with that concept now, but we're just simply drawing on boxes to show you it from a supply and demand perspective. Okay, cool. So we get that shift in small internal order flow, and then we continue down, and then we take out that low. So that gives us another internal break of structure, which then means at that point, the larger internal range is from that high, right? Because this is the high that took out this low, and then this low here. So we pull back, all right, and then we continue that bearish order flow. So we get another internal break of structure. So now we're playing within this range. Right, so that gives us this supply range here, right? But then what happens is we mitigate maybe some extreme demand within here, and then we get a bullish break of structure to the upside, right? So now the internal structure, get rid of all these lines, has now shifted bullish at this point here, and this is now where the larger internal structure has shifted bullish, but the larger bearish order flow is now bullish, right? It's the exact same thing. Where you get that internal break of structure is essentially where the order flow then shifts, right? So now what do we expect? Now we expect these demand ranges to hold until it takes out that weak swing high, right? Until it takes out the start of that bearish internal leg, which in this case is where the swing high is, right? So that's why when we get that shift in bullish order flow, that shift in the larger internal structure, we now expect these ranges to hold, right? Until they go the whole way up. And likewise, if it didn't, right? Imagine if we came up and then we switched bearish, then what would you expect? Then we would expect bearish order flow to hold until the downside, right? And we can draw those on as supply ranges, right? So we just have that, and you just expect that bearish order flow to continue, right? And it will keep being respected and respected until it goes all the way down. So hopefully that should make sense. We'll look at some very, very basic examples on the chart, and then in the next lesson we'll go into kind of some slightly more advanced concepts on how we can, trade within all of these little movements. But it just comes back to that framework, knowing how swing structure works, knowing where your weak and strong structures are, and then just simply knowing that after a break of structure, swing structure, we expect a swing pullback. It's likely going to want to come down to mitigate the prior swing range, but it doesn't have to, right? But that's the general expectation. We then get the larger internal structure shifts bearish. So you can see it comes down, it mitigates the prior range. It comes down, it mitigates the prior range, right? It comes down, mitigates the prior range, and it comes down. Then it shifts bullish, right? And then this moment here is when the internal structure is aligned with the overall swing structure. And this area becomes your highest probability buy in terms of that because it's all aligned. And then we expect those bullish demand ranges to hold until the weak high goes. And then we would repeat this whole cycle again and again and again, right? And that's what we expect. But what we've done in this example is just drill deeper into what can happen, right? In these larger internal pullbacks to look at the smaller internal order flow within that. Right? Because you can have that one straight push down, but within that you get a little bullish change of character. And remember, chalk is just a signal that we're now getting internal pullback. And the IBOS is then the signal that we're getting the swing pullback, or the end of the start of the swing pullback. That's the way you want to think about it, right? Chalk signals an internal move. IBOS then signals the swing move, right? So what do I mean by that? That chalk here means we're going to get that pullback. That chalk there means now the pullback's over and we're going to get that run. Right, because chalk signals the internal swings. The IBOSes signal the swings, right? So when we get that bullish IBOS there, that signals that the swing pullback is over and the next swing pro trend run is going to go, right? And that's the way you can think about it. Now, what I will say is this might not necessarily be a chalk. That might be a small IBOS, right? It's going to depending on how big price is. So I appreciate that might be confusing for some people. So what do I mean? Well, we know we have this big swing movement down and then, internal movement down, and then we have internal movement back up. Now, in reality, in like the real life price action example, this small bullish internal order flow here, right? Imagine this is like, I don't know, 5 or 10 candles, right? So it's like a visual pullback that you can see and then a movement up. So then this movement here, we could call it an IBOS, right? It's just a small IBOS of the large internal structure, okay? Now, if that's the case and this is multiple candles, then what could happen up here is you could see like a little chalk. So that's when you've got like the one candle first to break the prior candle's high, and then we get a change in character. Okay, but that change of character there, all that signals is it could just be a pullback into here to then continue up, right, in that instance. So again, it'd be easy if I could explain with candles, but imagine this is multiple candles. Then we have a movement up, and then you get one little candle that fails to break the prior candle's high. So then you get a pop up and then a pop down. That obviously would be your chalk, but that at that point only signals that we could be pulling back to this strong low, right, strong internal low, right? But it's only when you then get that IBOS that now we expect this movement. Okay, so that's in an instance in which it, like the chalk could be here, but that's an actual IBOS. But then imagine that actually this is a really small movement on the candlestick charts. And this is just like that one or two candle that fails to break the prior candle's high. Then it's like just one candle that moves up. Then of course this would be a chalk. So hopefully you should understand that. And it's the same thing, right? You just have to understand in what particular sort of piece of price action we're seeing, what each thing means. But if you understand the hierarchy of what these words mean and then what they lead to, then that should make perfect sense. Don't worry if that's a little bit confusing as we go through different real life examples on the charts and the candlesticks. Hopefully that penny will drop and it will make a lot more sense. So yeah, I'll leave that there in terms of a bit of theory. We'll now just hop on the charts and quickly just practice mapping some order flow. And in the next lesson, we'll go through some slightly more advanced concepts. But as always, please take your time, watch this lesson as many times as you need to. Alrighty, so let's just do some very basic sort of drawing on order flow. Just going to stick to one time frame and hopefully just kind of get your minds to sort of getting used to seeing it. So let's kind of zoom into some old price action over here, right? So I'm not going to bother drawing on swing structure and internal structure and labeling charts and all this thing. I'm literally just going to draw it on from supply and demand ranges. And we'll dive into kind of the more like proper chart walkthroughs a little bit later where we'll really talk through price action and start to think more about trades and things like that. But for now, let's just practice drawing on these demand ranges. So let's just start here, right? We can clearly see from the low to the high that price breaks that range, right, to the upside. So that gives us our demand range. So we have a range, initiation, mitigation, and then we continue, right? So again, draw it from the high to the low, drag it across to where it's broken, and then we have another demand range. You can see price initiates out, it comes up back and mitigates it and continues. So obviously from a refined demand perspective, potentially we would have had this run in here, and when we got that breaker structure to the upside here, we would be looking for potentially price to pull back in. But we know that price does not have to pull back and mitigate refined demand, right? And this is just showing you, but the actual bullish order flow is continuing because it's mitigated the range and now it's continuing to the upside, right? So, oops, I don't remember demand range. So draw it from the high to the low, drag it across from where it breaks, and then we get that initiation out. Now, you can have obviously smaller and larger ranges too. This is where order flow can get a little bit messy, right? So again, you've got this little range here from the low to high where it breaks out. Then what happens? Well, if you draw from the low to the high, it doesn't matter which order you draw it, but you just drag it from where the box, right? You could draw it from the high to the low or the low to the high. Obviously, that doesn't make a difference. You drag it across. Does price break to the upside or the downside? It breaks to the downside. It actually breaks there, right? So that then gives us what? It gives us a supply range. And then again, what do we have? We have it from the low to the high, drag it across where it breaks out to the downside, so that's your demand. Now, at this point, because this was initially unmitigated, right? It didn't. You see how it pulls back into it. So at this point, because this was only a tiny, tiny pullback, potentially at this point, if we didn't obviously know what was going to happen, we could hypothesize, right, or have to be aware of that we may have only just created the supply and broken this tiny, tiny demand range just to mitigate this slightly larger, more significant level here to then continue to the upside, okay? And then you can even see the fractal supply within that. This is where I can get a little bit more advanced. All right, we have this like supply within here. It was just to mitigate that. Anyway, let's keep it on kind of the bigger ones, but you can see that, right? So at this point, although we can start to see that we've had a little bit of a chalk, right? So there's a chalk there, which now means we have this supply and we've come into here. We have to be wary that potentially that slightly larger, right, bullish order flow could have continued, right? And this is where we're gonna have to combine it with all of the confluence that we use. But then once we actually break out of this, right, now it's a lot more obvious that supply is in control, right? This bullish order flow has now been disrupted because if you follow the series of mitigations, right, that was the last mitigation of this range here. Then we have one leg up, we come in, we mitigate it, but we fail, and then we come down. So once that low there goes there, now we can say, right, this bullish order flow has clearly failed, and now supply is in control, right? And now we can look at these ranges, right? So from the low to the high of that range to where it breaks out, okay? And then again, you see how it comes up, mitigates the range, and then continues down. So we have this range here. That's broken out. And then we have from the low to the high, right? It mitigates the range and then continues down. And obviously we know within those ranges, what do we have? We have those smaller supply zones that we would typically look for to trade from, right? But we know price doesn't have to come up to those extremes. But what this helps you to visualize without even drawing structure on, you can see that. Structure shows us the same thing without drawing on these large ranges. And then again, from the low to the high, what does it do? It pulls back, mitigates this previous range, and then gives us a new supply range. And then in this instance, what do? Go from the low to the high, right? We pull back into the prior range and we break out. From the low to the high, pull back into the prior range, right? And then we break out. And obviously there's smaller ranges within here and stuff, but let's just kind of focus on these for now. All right, from the low to the high, and we have this range here. Okay, price doesn't pull back, it doesn't have to. And then we have this range down here. Just drawing a few more, just so you guys can kind of get a feel for it. All right, so price breaks out there. Now, what happens is we get price break this small supply range, so we get that bullish change of character, so we can draw it from the low to the high. All right, whoops. String this across, keep it nice and perfect for my chart OCD, so high time frame demand range, right? So then we break out to the upside, okay? And then from this low or high to this low, right? And then we break out. And then what happens? Then we break that range to the downside. So if I actually rein this in, draw from the low to the high, right? Drag it across, where does it break out to the downside? So now supply is back in control. Oops. Get a bit quicker at drawing this. And then again, all right, we pull back up to mitigate that supply. And you can see the larger range, right? What is that? From the low to this high, you see how that was just one larger range, right? For price to mitigate. But you've got those smaller ranges within there. Okay, and this is where the fractal nature comes in. And you've got this larger range right as price breaks out. Okay, but then price breaks out of that larger range to the upside. Okay, so you draw from the high to the low from that leg. And you can see that this was just one demand range, right? So you can rein that in a bit then at that point there. And you can see prices just coming back to mitigate this demand range. But you can see there was earlier signals that potentially that was going to happen when you see this shift here, right? You've got a supply range within here. And you can see how it can be quite fractal. Right? But at that point, as we break this high here, because at this point, supply was still in control. So we didn't know price was going to break out. So although it breaks this little supply range here as price comes up, it's not until you get that IBOS there, because look, you got that movement, that movement, that movement, that movement, then it breaks out of the supply range. Let me get rid of some of these lines. All right, got the larger movements. If you look at the larger swings in price, you got that movement there, and you got this pullback into the larger range, all right? And then you've got that next leg down out of the range. So we would still say bearish order flows in control at that point, right? You've obviously got smaller ranges within it, so price comes into it, it reacts, then it breaks up. So that's the first sign you've got a chock, but it's not until you get the IBOS here that now we can say, okay, that supply range has been, broken. And now we get rid of these orange lines. You'll see, should be a lot clearer. We now have that bullish order flow. So this would be your 4-hour change of character, right? So that's your first signal that we're having an internal pullback. But then this here would be your 4-hour IBOS, right? And that's only when you get that you can see now, right? That shift in the larger structure where supply was in control, the larger internal structure was in control. Potentially this is your swing structure, right? It's the same, all the same thing, right? In terms of this concept that we're looking at here in terms of order flow, right? And then we would do what? We look from the high to the low that broke out the range. That's your demand range. So I'll draw on so it's visually easier to see. So high time frame demand range from the high to the low, drag it across to where it's broken, right? And then we can rein this into there, just make it nice and pretty. And then you have your next pullback. So we initiate out of the range, we pull back to mitigate the range, and then we continue. So from the high to the low, drag it across. And you see how we now have sustained bullish order flow, right? Now what happens? Well, again, you can draw from the low to the high and drag it across. Does price break to the downside or to the upside first? But it takes a while, but it breaks to the upside. So we have that sustained bullish order flow. We continued, right? And then what's happened? We've now come up to mitigate, right, that prior supply range, right? Obviously, you can refine it a little bit to that candle. We've come in from within here to mitigate that, right? This range here, let's just leave it nice and open. So then at that point, what happens? So then we break the low down here, right? So now we have bearish order flow, right? And we could technically draw it from there. We can keep it nice and clear here. All right, and then you have your larger supply range. Sorry, mitigated here, and then price breaks out of that range, right? To come into here, and then you have smaller ranges get shifted because obviously you've got this one as well. So you could think at this point, right, when you get that change of character here, that potentially, now we're going to see a bigger movement. But what is it? It's just to facilitate a pullback into, because you've got to look at the larger swings as well, right? This is a big movement down, big movement up, big movement down, right? So that's your IBOS or swing structure, right? And then that'd be your pullback into here. So although we've had a little change of character here, right? Or maybe let's call this swing structure, right? That'd be a swing boss. That could be your IBOS, but it's just to facilitate what? A movement into this protected high. That's your weak low, right? Swing pullback, swing push down, swing pullback, and then we continue to the downside, right? But what happens when you get those pullbacks, you get a shift in the internal order flow. So from that high to that low, and then here, right? And then it mitigates the extreme supply, and then we ended up switching bearish, right? We come down, mitigate that range, and then we continue down. And you see how all of that was just what? To create that next larger range. Okay? So on and so forth. And you can kind of see how that happens, right? We have bullish order flow, it gets disrupted, and then all of the supply ranges are respected. And within those ranges, you can have little shifts. Like here, because this probably was most likely a daily boss. So what do we expect after a daily break of structure? We expect that daily pullback, right? So it's just to come in and mitigate this decisional daily supply range here. And in order to do that, what happened? The 4-hour then switched bullish, and you get sustained bullish order flow, mitigates what? The prior daily supply range, right? The entire swing range is there. It's probably like a weekly candle, right? That's your daily range. Comes back and mitigates that range. Then the 4-hour order flow and the 4-hour structure shifts bearish. And then what do we have? Then we have, then we have the sustained bearish order flow. And within that, what happened to facilitate this pullback? We had that switch bullish, and then once it switches bearish, that protected high stands, and then we can take out this weak low, and we continue, right? So you can kind of see the fractal nature of the market there. So I'm going to redraw on that, and you can go back and see this. And this is what I mean by, like I said in the other video, if you were stuck, if your trading view literally froze on one time frame, no matter what time frame it was, if you zoom out enough, you can make sense of it all. Like just draw on these larger swings in price, right? Supply range. Right, and then you get the next daily supply range. Mitigates the prior range, push down, pulls back to mitigate the prior range, pushes down, right? And then pulls back up to mitigate the prior range, right? You can see this. Oops. So it's daily swing low, right? Daily swing high, daily swing low, daily swing high, daily swing low, daily swing high, daily swing low, daily swing high. And you see how it's just each range, right? That's your daily swing range, right? It comes down. You got another daily swing range, and it comes down. Right? That would be, say, your daily structure. Get rid of all that. And then within that, you've got your 4-hour structure, you can see, right? Lower low, 4-hour lower high, 4-hour lower low, 4-hour lower high, so on and so forth, right? Then it probably switches bullish there. It ends up being not a fake signal, but it's only a short-term bullish trend on the 4-hour chart. Why? Because it's just a daily pullback to mitigate the daily range. And then we continue down and switch bearish again, 4-hour lower high, lower low, right? And then we switch bullish on the 4-hour chart around here. Potentially there's a swing in here. Just, you can see what's going on. We temporarily switch bullish. Why? Because it's just a daily pullback. That's a daily protected or strong high to then continue that movement down. So when we come into this level and then we get that shift in order flow and the 4-hour switch is bearish, we then expect what? The bearish ranges to continue and to hold until this low is taken out, right? And then again, then we have a daily breaker structure. So this is your daily high, this is your daily low. The 4-hour then switches bullish to what? To facilitate a daily pullback into the daily prior range. Doesn't come up that high this time. Like this one came a little extreme. This time it just taps into the bottom of the range. The 4 hour then shifts bearish. Order flow on the 4 hour shifts bearish. And then we can target this week daily low, right? And the ranges get respected until that's low taken out, until that low is at least taken out, right? And then we continue to the downside, so on and so forth. And you can see these larger ranges without, having to go on and draw structure and everything just to get a feel for it. Like practice doing this. I personally find it quite fun. Just seeing it. And obviously you can dive into that. There's smaller ranges within each range, etc., etc. This time it spikes above it, fails to close above the high, and we continue that bearish order flow, right? And you can see these larger daily swings in price. This can really sometimes help you to visualize multi-time frame analysis if you kind of struggle with that. And we've got another small range within here. All right, and that's where we're pulling back into at the current time and price. And then even within that daily pullback, what do we have? We have those internal sort of shifts in order flow, right, from the low to the high. We break out, initiation, mitigation, continuation, right, from the high to the low. And then you have smaller ones within here, right? And then when that shifts, you then obviously get supply then in control. Sorry, I know I'm talking really weird and slowly, but it's trying to keep up my drawing as quickly as my brain and what the points I'm trying to make, but hopefully you guys can see, right? And you've got ranges within ranges. Drag it across, doesn't get mitigated in this instance. But yeah, you can see them, right? Smaller range until that weekday low here goes, right? They all hold, right? That larger range, so the low you come into this low and you get that, it's not even a bullish chop, but this high breaks, right? It's the supply range holds. And again, that range holds here. And then we take out the low. And so on, so forth. Right? It's not always going to be perfect. You get disruption of the order flow there, but order flow is a little bit messier than just structure on its own. But yeah, I'll leave it there. We'll dive into some slightly more advanced stuff now in the next lesson. And then once we kind of get that theory out of the way, then we'll do some kind of, much more in-depth actual walkthroughs of mapping everything on, using all the concepts that we use. And we'll really see how we kind of going to piece this together to actually use with our day-to-day trading. But at this point, kind of just wanted for you guys to get a quick visualization of how we draw these ranges on, and you can kind of see those shifts in order flow. Like, spend more time than I have done this. I just don't want this to be like a 3-hour video, and you can really dive into, like, even within that green pullback, what do we have? We have, I'm not going to draw it on, but you have that internal order flow, right? And then what happens? It gets disrupted, and then we go for the week high, right? And then we come down, and then the order flow stays bearish until we take out the overall week low, right? Because that leg is now done, and now we're getting the next push down, so on and so forth. So yeah, hopefully that makes sense. Watch this as many times as you need to, and I'll see you in the next one. So now let's look at a slightly more advanced, example, but still using all of the same concepts we should now be starting to get pretty familiar with. So obviously this is a line chart, but imagine this would be a typical representation of a complex sort of range, which is obviously, that can happen a lot in the real life markets, right? It's not always going to be very simple, basic bullish and then bearish order flow like we see in the textbook. So how can we apply what we've been using to this, right, when we have a blank chart? Well, what's the first thing we should always do? The first thing whenever we have a blank chart, right, structure is obviously king. That's the first thing. But then what's the first thing within structure? It's swing structure. So we want to find out what current swing range are we within. Well, in this instance, this is a swing high here. So this was a swing break of structure. Okay, so let's use the highlighter tool to do our swing point. So that's our swing high. Obviously, once this breaks, when we get the break of the swing high, we get that bullish boss, we now look at the lowest point. Obviously, in this case, this was going to be our swing low, and then we move up, and then we start to have a sizable pullback. So at that point, we can mark that out as our swing high. So that brings us up to this point here. So what do we expect after a swing break of structure? We expect a swing pullback. So we start to get that pullback to form that internal lower low. We then get an internal lower high, and then we get an internal lower low. So we can mark that on as our internal break of structure, our bearish internal break of structure. And one thing I forgot to say is we're going to start to bring in our order flow now. So when we did have that bullish break of swing structure here, that gives us what? It gives us a swing demand range, right? So we can draw from the high to the low. Doesn't really matter what order you do it in, and drag it across. So we know that when we have that swing pullback kicking in, that this is a pretty good area to either target your counter trend shorts into, and or start to begin to look for buys as it comes into towards this level. And obviously we'll have our nice refined pivot demands drawn within here. But for now, that's the simple order flow expectation, right? What do we expect for swing order flow? We expect it to continue: initiation, mitigation, continuation. Okay, cool. So we now know that the internal structure has shift bearish. So let's put on our little dots, because this will help as things get a little bit more complex as we go along, right? So we can draw on our internal lower high there. And now let's start to draw on the bearish internal order flow. So from the low of the range to the high of that internal range, and then drag it across to where it gets broken. So we can start to see that internal bearish order flow kicking in. So once we get that bearish break there, what do we then expect in terms of the internal structure? Just try and, like, if you're getting confused, just think of one thing at a time and then start to think about the next thing and how they sort of interact, if that makes sense. So just look at one piece of the puzzle and then think about the next piece. So what do I mean by that? Well, let's just concentrate on the internal structure. So we know we're bearish, we've had the supply range, we've had internal breaker structure to the downside. So at this point, this would be the active internal range that we are within. Okay, so the expectation from purely just an internal structure perspective is that this will be a strong or protected internal lower high, okay, which then made a lower low. So purely from an internal structure perspective, the expectation would be that this will hold, that price will pull back into here, that the bearish order flow will continue, that this high will not be breached, and the internal structure will continue. That's only if you're thinking just purely about internal structure on its own, right? But obviously, we have to be a bit more advanced than that. We know that swing structure is more powerful, and price has mitigated and had a sizable swing pullback into the prior swing demand range, okay? So whilst price starts to move up, maybe we've had a bullish shock down here, right? We can be anticipating that potentially that swing high low has formed, right? But it's not until we get that bullish internal breaker structure, right, of that larger structure, that then we have a much stronger signal that potentially the swing high may be in place. So once we get that bullish internal breaker structure there, okay, we can obviously draw on our internal low dot there, and then we get that internal higher high here. Now the internal structure is bullish, right? So we're talking about price at this point here. So now the internal structure has aligned itself with the overall swing structure, and we can start to potentially think that this could be the swing high low forming, and now we can look to target this weak swing high. Because once the larger internal structure aligns itself with the swing structure, the start of that bearish internal run, right, is now weak, which in this case lines up with the weak swing structure. So once we get that initial bullish IBOS, what do we expect? We expect the bullish internal ranges, that bullish internal order flow to continue until that weak high goes, okay? So at this point here, when we get that initial IBOS, we can now draw on our new internal demand range, right? From the high to low, drag it across, right? And now anywhere within this green box, right? Because that is what? That's the internal range we're within. When we get that, let me get rid of this orange line. When we get that boss, right? Just like the same way we wanted to know what swing range we're within, we are within that swing range. When we get this boss now, what's the internal range we're within that high? And we know that this is the internal low. So that's your active internal range. And we know that price can do what? Initiation out of the range, and it pulls back to mitigate anywhere within this prior swing range, that green box, right? Anywhere within here. That's what we expect. So we pull back into that green range and then we continue up, which is what we would have expected. We would expect that bullish internal order flow to continue. Okay, so when we get that next bullish IBOS, we can again draw on our new active internal range, which is between those two dots I've drawn, right? This low here and this high here. And we have a new internal demand range. All right, we're following that internal order flow. So now what do we expect? We would expect the internal structure to pull back, mitigate this prior range, and then continue to the upside, right? And take out this high and then potentially this high, right? We'd expect that to continue until this weak swing high goes. But as we can see, price probably mitigates some supply within here, right? From that weak swing high, sometimes that can happen, right? It can play out. And then what happens? Instead of price continuing to form an internal high low, we get a bearish internal breaker structure. So can you see how just mapping your swing range first, Then looking at what the next sort of larger internal structure will be, because of course it could be a bit more complex with this, and there could be like these little movements within here. But you kind of just want to be focusing on, right, you've got your initial larger swing, and then what's the next sort of biggest significant swing, right? And then that becomes your first layer of internal structure, if that makes sense, right? So that's the main one you want to then be focusing on. So we were initially bearish, then we got a bullish IBOS after mitigating the prior swing range, so we know there's a decent chance the swing high low could be in place. We then get a bullish IBOS, which then gives us our next internal range. We come down and mitigate the range, and we continue up. And then we expected this new range here, right, between this low and this high, to mitigate this green range and continue up. But in this case, it didn't. It mitigates some supply within here, and that leads to a bearish IBOS, right? So as price is coming into the supply here, we know it's a weak swing high. And if you were shorting from here, you'd be shorting from supply at a weak swing high against the swing trend and against the internal trend, right? So this would be very, very risky. So price could come up in here, and it could give you like a bearish chock, for instance, right? That bearish chock is what for us? That signals, a chock signals an internal pullback. So at that point, we could just assume that now potentially that internal pullback is coming in. This is a strong protected internal low, and it's just going to mitigate this range to then give us potentially a chock, and then we would look for that, right? So if we were to get a bearish chock up here, we could only really assume that that's the pullback that's about to start, and we would imagine that that's likely to happen, right? That would be the expectation and the framework that we use. But in this instance, that low doesn't hold, that strong internal low, and it breaks, and we get a bearish IBOS. Okay, so now what has happened? Now the internal structure has switched bearish, right? So at this point, because the bullish order flow has been shifted, and because this bullish leg, right, this run, it failed to take out the high, when we get that bearish IBOS, remember the rules from advanced market structure, you should know this. Now this low here becomes weak, and we can target this low because it failed to take out the prior leg here, which happens to be the swing high, right? When we have this, get rid of these lines, when we have this leg here, right, and then it shifts bullish and internal structure, right, the origin of that high is where we expect the ranges to continue until it takes it out. But in this case, it fails to do so. So as soon as that shifts bearish, now we can target this larger weak low, right? So now the internal structure is bearish. So now what do we have? Now we have an internal supply range. So drag that across to where it's broken, right? So now what we expect is price to form a series of lower lows and lower highs until it takes out this low, right? And for that to be respected. So let's quickly draw these on. I know this takes a little bit longer for me to do it this way, but I think it will, sometimes it's very easy. You can see a fully drawn up nice diagram and it all makes perfect sense. Obviously when you're in a live market or you're trying to make sense of candlesticks, it can be a lot more complex. I think it's worth us taking our time and mapping it out step by step. And I would encourage you guys to draw your own ones on and try it yourself. So we get another break of internal structure here, which gives us what? It gives us another internal supply range, right? So you can see the bearish order flow sustaining itself. So we get the initiation, mitigation, continuation, which is obviously the initiation out of that new range, mitigation, continuation, right? Until we take out this weak low. So when you get that first initial, like say bearish IBOS here, what you could then do on your charts, if it helps you as well to kind of keep track of it, is you can write weak low or like put a liquidity thing there, and you know that like that low is likely now to become inducement for something below here, or at least like that becomes a targeted weak low, right? So then that bearish order flow continues. Let's put on our dots so we can keep track of the internal structure. Okay, and then draw on our next supply range. Cool. So that meets all of the rules so far in our expectations, right? We were supposed to take out the high, we failed to do so. Then the internal structure shifts bearish, so order flow switches bearish. It's the same thing essentially. Price then pulls back in, and we expect that bearish order flow, that bearish internal structure to maintain itself, where each of those protected lower internal highs are not breached, right? Pulls back, but it never takes the high, it never takes that supply, right? Exact same thing until that low goes. Once that low goes, then we can potentially expect, something might change, right? Because we come into the, say, extreme. All right, we know that the extreme demand zone within the prior swing low, because remember, this is a strong swing low because it took out the swing high. So we're expecting this to hold. As price now comes into this extreme strong swing low, we know that this is the highest probability area to be buying to do what? To catch the new swing low. This is the last point that has to hold if that swing low is going to continue. So this becomes a very interesting area, right? Let's move this down, we can zoom in, to look for longs. But before we get to that, let's where are we with internal structure? So I'll make that a little bit smaller so it's obvious. Draw that as our low. We are currently still, bear with me, within this active large internal range here, right? Because that is the internal structure we're within, and we currently just made an internal lower low. So although we've come into a very high probable area for a swing high low to form, and we have to be aware that that is stronger than internal structure, at this point, we could just have this bullish change of character just to pull back into this protected internal, it's a strong internal lower high, right? And then that could continue, right? We have to be aware of that, okay? But that doesn't mean that we cannot trade against the larger internal structure and against the bearish order flow. We can, right? But there are obviously certain ways in which we can do that. So let's say here we get, this could be, and this is what I was trying to say in the other lesson, right? This could be a chalk where it's literally just, like 1 or 2 candles that pulls back, but it also could be a slightly, it could be multiple candles. And that's when you have like the smaller internal structure within a larger internal structure, right? It's going to be dependent on just how big the range is. So this is good where you guys have to use, it's all one and the same thing, okay? So we get that bullish change of character or maybe a smaller IBOS, but we know it could just be to facilitate that movement into this protected internal high to continue to the downside. But because it's the extreme area in which the swing high low can form, this is when it can be high probability to trade against the larger internal order flow, right? And to get in long, right? So we may want to get in long here, but we have to be aware that we are trading against this. So as we get that shift in the smaller internal price action, what do we get? We now get, actually, let me draw on the supply first so you guys can visualize this. All right, we've got a little supply range there. That then gets disrupted as we then get a demand range from the high to the low. And we drag it across, and obviously you can have refined pivot demand within there. And then what do we expect? We expect those ranges to hold, to facilitate that pullback, right, up into here. But what happens? In this instance, demand holds, right? This range here holds, and price continues to the upside, right? So we then get a bullish internal breaker structure. So now what's happened is the internal structure has now realigned itself again, just like it did over here. And now when we get this break here, it's a much stronger possibility that now the high low is in place, especially as there's basically no more swing demand left for it to come into, right? So now when you have this movement here, this becomes our new internal higher high. We're now playing within this internal low and this internal high. So we want to try and catch that next high low because that is going to be very, very high probability. Why? Well, we've mitigated the last point we can mitigate. Internal structure has now aligned itself with the swing structure. So now when we get that internal pullback, this is when like all the stars are aligned for us now to get long and target the weak swing high, right? You guys should be familiar from the advanced market structure module, but now we're just overlaying the order flow onto that, right? The supply and demand ranges, because what do we have? As we get that internal breaker structure here, and we understand from the market structure perspective that we want to catch this high low, but it's like, where is going to be the high probable area to catch that? And that's where we can look at the order flow that happened here. And we can see that these internal ranges all held. This is the last internal of the internal unmitigated range, okay? And this can become, somewhere within this range is going to be a high probable area to look to get long from. Now, maybe there's something like this, right? And this is where you're starting to overlay the other concepts where, say, we had this supply zone, price came into that supply zone, reacted, failed to put in a lower low, flipped to the upside. So we then got the internal breaker structure. We then got the flip. So then we can draw on the extreme of that flip, right? Which is within what? The unmitigated range that we would expect that high low to continue. And then this becomes a super high probable area to look for longs to ultimately target that weak swing high, okay? And that's it. That's essentially what we're looking to do with order flow here, okay? I just tried to make a slightly more complex example of what can happen because obviously it's not everything's just picture perfect. We don't just always pull back and then break the swing high, right? Sometimes it can take a while. We can get within larger ranges, but this is how you interpret it all. So get your swing mapping done first, and then you want to look at the next sort of larger internal structure within that. And then obviously if it's a really big swing range we're playing within, we can get structures within inside that. And this is how we interpret it. So, when we're up here and we mitigate supply and then we switch bearish, now we can understand that we're going to probably come down and take out this low. We don't have to, but it's likely. So let's say there's a demand zone within here. You could buy from here, But one, it's already risky because you're buying from a weak low that we expect to get run. But if you are going to do it, right, manage your expectations that it's probably just going to be a quick play into this previous swing range here. Why? Well, because this is a protected / strong internal lower high, because we've got the lower low, lower high, lower low. So if you're going to buy from here, which I wouldn't recommend anyway, because it's a weak, larger low, just expect that movement into here, because that's most likely going to form a lower high and continue down. Now, once we take out this liquidity, we take out this weak low, we come into the extreme demand zone, we then get a small shift either with like the chart or the smaller internal structure. Now this is a good area to get long, but ideally we want to be buying here before this range is mitigated. But I'll talk about that in a little bit, right? Because that can improve our probability of removing our risk in case we get that movement there, right? And the internal order flow stays bearish. So then we get that internal of the internal staying bullish. We fail to break it, right? So we continue up because it's only if that low was to go, right? If we got that internal boss here, then what? Then we would have, sorry, it's a bit messy, but we would then have that supply range here, right? Because price broke it to the downside, and then we would expect price to come in, whoops, and then continue down, right? If that was the IBOS there, right? Because that should stay bullish till it takes out the high. We only get confirmation that this low is going to go when we get the bearish IBOS. So if that happened in that instance, right, it's poorly drawn, but you get a pullback into the supply range and then that movement there potentially, right? I'll just redraw that. So this is kind of the highest probable sort of trade I'm trying to point out is then, you might not want to get in here and you might want to wait for all the stars to align, but then we get the larger internal structure shifting bullish. Then we can look at this unmitigated smaller range. We've got a flip here, potentially that flip this level, and then we can look to come in within here, right? And then this is where we want to keep potentially buying. We expect that order flow to continue, right? Until it doesn't, and then we can look to buy the next high lows until we target that weak swing high. And then after the break of the swing structure, then what do we expect? Then we expect the whole cycle to repeat itself because we expect a swing pullback. Okay, now some other little things I'll kind of throw in there that you want to be thinking about is things like, there will be, I think I said this before in the other lesson, right? There will be older supply zones that look pretty good, right? Like you'll see these unmitigated pivots. Like let's say, price comes up to here, but remember, because these ranges are mitigated, what are these old supply zones? Once the internal structure shifts bullish, right? All of these old highs here, they're just liquidity points that we are looking to target. So if we get this bullish breaker structure here, we expect that larger internal pullback, right? So if we see an unmitigated pivot supply zone, we can look to play this movement. And this is why it's advanced. Depending on how aggressive you want to be, how in and out you want to be, how big the actual range is in terms of pips. So you actually do have the risk to reward, i.e. if you get in with a 2-pip stop, is there 20 pips here? So then you've got 10R, or is this a 4-pip movement? Well, obviously then that's not going to be the risk to reward on your side. And this is what I mean by about knowing how to interpret these frameworks into what actually price action looks like on the real chart. So when we get that bullish IBOS and we're waiting for that pullback, if there's enough RR, you could look to play that. So imagine this is the M15, price comes into that level. What are we going to get on the M1? We're going to get a shift in order flow. And then we can play that movement down into here. We'll come into here, and you're going to get a shift in order flow on the M1, right? And then we can look to buy because now the M1's aligned with the M15 internal, which is aligned with the M15 swing internal, right? So on and so forth. And then that could come into another supply zone up here, right? It'll mitigate that. All right, and then that would shift bearish. And then you might want to play that movement back down into what? Back down into the next demand range. All right, and that's literally it. That is literally how the markets move. It's the fractal way in which, the M1 will turn before then the M5 turns and then the M15 turns and then it pulls back, right? You guys should be familiar with that anyway from the multi-time frame analysis videos, back in the original technical analysis module. But now we're kind of just, diving much more deeper into the differences between the internal structures and then overlaying these ranges on top. So again, I can appreciate that this is a little bit overwhelming at first, and this is why we've tried to do as many examples as we have, slowly making them like a little bit more advanced, layer by layer, and adding bits to it. But hopefully you can start to see now, there's an infinite number of ways in which I could have drawn this, but the framework is always the same, right? Get your swing structure map correctly, know where your strong and weak swing high is, so you know what order the overall trend is going to be. Then the next thing you want to map is the largest internal structure within that. Know what current strong or weak internal high you've got. Are we bearish or bullish on the larger internal structure? Okay, we're bearish, so that means we're pulling back, right? But then we shift bullish. So okay, at that point, the internal structures align with swing structure. So now we expect those bullish internal structures to hold, those demand ranges to hold until that high gets taken out. In this instance, it didn't. It mitigated some supply at the weak swing high and it shifted bearish. But it's only when that larger internal structure shifted bearish and that larger order flow shifted bearish that then we expect this weak leg to go, right? That whole leg, it's been disrupted now, and that low is likely going to go. So once we get that bearish IBOS there, what do we expect? We then expect each internal range, large range, to hold until that low goes. Once that low goes, then it's much more likely now that all of these mitigations here are going to become liquidity, right? So as we come down, we can still expect that this is a strong lower high, internal high, to potentially go down, but obviously we need to putting all the pieces of the puzzle together to know that now selling from here, even though it is an internal strong lower high, is not as high probability as when we were putting it up into this point. Because when we had that break and we pulled back up and we were trying to short here, we still had this low to target. We knew it was likely this low was going to go. But once this weak low has been broken and now we've come into the extreme demand, remember swing structure is more powerful. So this is a strong lower high at that point, and that was a strong lower high, but it's much lower probability to be shorting from here because now we've mitigated strong extreme swing demand and we're expecting that movement. Okay? So ideally we can get in down here because if we get long and then price comes into here and it continues that overall larger move, right, we can remove our risk. Where we don't really want to be getting long, right, of course it can play out because like I've been saying, swing structure is more important, is when prices pull back up into this previous range, because at this moment the larger order flow is still bearish, right? This is the larger movement and it's likely that lower high, internal lower high could form. So now when we mitigate that and we come down, right, this is lower probability to be buying now compared to before when you buy from here, because this movement hasn't mitigated the range yet, it hasn't mitigated supply. So we know there's a decent chance we could still get that deeper pullback. But once we come up into here and mitigate the supply and then we come down, this is much lower probability. It can play out, but it's much lower probability. And obviously it's only once we get that smaller internal IBOS there, bearish IBOS, that we'd actually have confirmation that low was going to go. Okay, but yeah, hopefully you guys should be familiar with that concept. And then once we get the bullish internal breaker structure, order flow is then bullish. It's in line with the M15 swing trend. Now we can look to buy this movement within here, and obviously we can overlay other concepts, flips, look dropping down to the M1, expecting the M1 to come in, right, etc., 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 and then we continue to buy from those ranges and continue to the upside, right? One of the scenario I'll leave you with is like, let's say we get a movement like this, right, and then it fails to take out the swing high, and then we get a bearish IBOS like this, right? Let me just draw this out and think about this. So what you often see is people will go, okay, we came into supply here, we moved down and we moved up, which now means we have a flip zone here, right? Because this reacted from supply, it failed to put in a lower low, and then we got to push up, right? So this is a flip zone. This is the supply to demand flip zone, right? It's part of this demand chain, right? It's in line with the overall swing trend. So now when price comes down into here, I want to get long, okay? But what you're actually trading from at this point is a weak leg because order flow has shifted now bearish because we've had that bearish internal breaker structure. And it's not the best drawn example in the world, but we would now be expecting what? We would be expecting that bearish order flow to continue until it takes out, let's draw on, until it takes out the origin of this weak leg, right? Because this leg, it did hold, it held, and then it failed to do its job, and then it switches bearish. So we go down to the origin of where that bullish trend started, right? So then when we get that bearish order flow, although you've got a flip zone down here and it's part of a demand chain, blah, 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 we're now expecting only that movement to then continue down. It doesn't have to, but that's generally what can happen. And people can take losses here, or not even losses, but they get in and then they wonder why that's then happened and it hasn't gone out, even they entered discount pro trend, etc., etc. But anyway, I don't want to go through infinite amounts of possibilities that can happen because it's more about if you can wrap your head around. I mean, to be honest, I personally don't think it's that complex to understand the rules of the framework. It's when you're looking at these examples that I'm going through and you see all these boxes and you see all these lines and everything, especially when you go on the real charts, that's when your brain can get lost. So don't try and kind of memorize all these scenarios. It's more about really understanding the law, let's call them like the laws, the structural laws, which is, let me find it, which is this here, right? Remember, a change of character, which is that break of a fractal high-low, signals that an internal pullback is starting or ending, right? These are like the laws. An IBOS signals that a swing pullback has started or ended. That's the hierarchy, okay? So hopefully if you have that, everything else will fall in place from that. Likewise, if you have a smaller IBOS, that will signal a larger internal pullback is starting to ending, right? And then if you have the larger IBOS, that will then signal the swing, right? You have to think about it as like layers on an onion or a cake, and what they all mean, right? The chock will signal the internal pullback, the IBOS will signal the swing pullback. But obviously if there's you've got smaller internal structure and then you've got the larger internal structure, one signals the next one, and then the larger internal structure signals the swing structure, right? And when you really, really get that and you understand the order of importance, the hierarchy, then you can work your way from top down and bottom up, and you can figure out what's likely going to happen next. I know I need to see, right, let's just talk through it, right? Because I think it will visually make sense again. I'll end it on this, right? So at this point here, this is the kind of perfect example I'm trying to get at. At this point here, when we have that, whether that is a chock, right, because that was just one little candle, or whether that's like 6 or 7 candles and we're in a massive range, then that would be more of an IBOS, right? The smaller internal of the larger internal. But you see, it doesn't really matter in terms of the actual theory behind it, right? Because that movement there, the break of whatever that is, whether it's a small internal high, so it would be an IBOS, or whether it's just a chock because it's just a candle, it's the same thing. All that signals is that it's the pullback of this larger range, right? Because that's the larger internal structure, right? Likewise, when we come up here and we get that, whether that's a chock or just a small IBOS, it's the same thing, because that just signals the internal pullback is over and the next larger internal run is going to go, right? So this small movement here just signals the pullback of the larger movement. The larger break of structure, of the larger internal structure, just signals the end of the swing pullback to get the next swing run. I don't really want to keep talking about it just in case it just leads to even more confusion, but that's literally what it is. If you can get your head around that, I'm putting this kind of content out, I guess, for the first time. So if there's a lot of confusion around this, or I get a lot of questions, maybe I'll try and think of a better way in which to teach this, and a more sort of clear example of, let's say, the laws of structure and weak highs and order flow, and I'll try and think of a better way to teach it. But I'm hoping that makes sense, and yeah, I'll leave it there. Maybe especially as well when we go on the charts and do a proper walkthrough and we look at tons of examples and we go a little bit slower, the penny will start to drop. I do appreciate that. This is a lot more advanced. There's a reason why it's at the end of the course. Until you really kind of nail the rest of the concepts, this might be a bit too much. But when you do get this and it drops and you see it on price action, it brings such a systematic, I don't know, it's given me so much clarity and so much confidence in my trading, with knowing what to wait for, when you want to wait for it, how far to target, just managing your expectations of price. And, it's like literally having an X-ray vision of the market. But I'll leave that there and I'll see you in the next one. So now we're going to look at what I think is almost a textbook example of really just keeping things simple with the sort of these concepts that we're learning, with diving a bit deeper into internal structure, and then utilizing that with order flow. Obviously, we can use that in quite a complex way, and we can make it as complex as we want. But really, we want to kind of ultimately keep our trading as high probability as possible, and more so using that framework and that understanding just to assist what we were already doing. To be focusing mainly on those pro trend runs in extremely well-priced areas from very high probability, higher time frame POIs, right? In order to boost our strike rate and to increase the average risk reward in which we actually bank, because we have a much better expectation of how far prices to go and what we want to see for when we're looking to get involved, rather than necessarily having to try and get into every single internal pullback, because although we can read them, it doesn't mean we have to trade them. So anyway, what we're about to look at is kind of as simple as I would probably like you to keep it when you're first, trying to introduce this into what you're already doing with your trading, okay? So don't worry about doing we're not going to bother doing like a whole full-time frame analysis here. We're just going to look at the M15 and the M1 just to kind of try and illustrate my point. So we have a bearish swing breaker structure to the downside. We then have a bullish breaker structure to the upside, right, as we take out the swing high. And we're viewing this as one big bullish swing leg up, and then we're having a swing pullback. So what's our very basic understanding? We want to catch the pro trend M15 swing high low to then target the weak high up here. So we're coming down into extreme demand. We have this extreme pivot demand zone here. We can see after it was created, price moved up, filled up some of those orders, and that led to a pretty powerful and strong move into that breaker structure. So whilst, yes, there could still be orders within here, and I would be more than happy to look for longs from here, right, if price came down into it because it's extreme, etc., etc. The 50% hasn't been mitigated. I'm aware in the back of my mind it's there. So typically what I'll do is I'll drag it across because it's not completely unmitigated, and I'll focus on the next unmitigated zone, which would be this inside bar, which we can see led to the swing breaker structure, right? So we know that it's a strong zone. What also did it do? It flipped this supply zone here, right? Which is a strong supply zone that led to a breaker structure. Price then came back into that supply, reacted, fell to a lower low, demand stepped in, flip supply, led to a breaker structure. Now it doesn't have any structural inducement and it didn't sweep, so that is some negative confluence. But all in all, right, if this M15 swing high low is going to happen, it's going to have to happen really from here, or potentially, it may push deeper into the zone. So all in all, a pretty damn decent, damn good level to be looking for longs from. Now, following, our bread and butter setups, following, i.e. the beginner trade plan, as soon as price enters a high probability, well-priced POI like this, we are more than valid, obviously depending on what's in your plan, but the majority of us can drop down to the M1 and begin to look for our M1 entry model to get in long. And that's fine. I'm not saying you shouldn't do that. What I'm saying is this is an example in which we can use some of these new concepts to potentially help us boost our strike rate, right? And not get in potentially too early. So what's one thing we can do in order to boost our strike rate and not try and catch a full knife? Well, we can wait for an M15 change of character. Okay, cool. So let's look at that. Well, since that break there, all of those candles have just broken the prior candles low, right? So for there to be a bullish change of character, we would need to see this high go here, right? So let's see what happens. Let's wait for a chalk. Okay, so we take that low, which now means our chalk level would be here. Okay. And then just about get a bullish chalk there. So maybe then you could drop down to the M1 and look for some longs within this wick, right? Maybe, there's some demand within here and maybe you could get long already. Now we've got a bit more of a convincing break, right? Now we're really starting to move up. So again, maybe you could wait for price to pull back in, like on the M1, I won't drop down now, and you could be looking for M1 entry models. And again, that's absolutely fine, right? We've potentially slipped something within that low, we've led to a bullish change of character, we pull back in. That could be clean, that could be an entry. Again, nothing wrong with that, right? But now when we understand, looking at the slightly larger internal structure and looking at order flow, what can we see? Well, we can see pretty much, this is all throughout Asia, we've just been selling off, right? Clear bullish order flow. I mean, this is pretty corrected. There's not too much structural lows and highs for us to work with, but then we've got a sizable pullback there, and then we've got the movement, right? So if we draw on that as our sort of nearest internal breaker structure, I'm just going to use a dotted line for that. What we can see is that for the internal structure, the large internal structure to shift bullish, we would want to see that high go, and that can give us a lot more confidence. Just going to get rid of the lines just to keep nice and clear. Why? Because we still have bearish order flow, right? That's the last supply range, and we haven't cleared that out. And you can even see like a strong inside bar level there. I'm going to use just this red so we can keep it nice and clear what I mean about supply ranges and then actual individual supply zones. So we've come into our nice strong level. We've had our bullish M15 change of character. So that's a decent amount of confidence, right, to look for longs typically. And that could be the move that goes. But let's say we want to boost our strike rate a little bit more and we want a bit more confidence, then really we want to see what? We want to see that internal breaker structure, because then that will shift from order flow from bearish to bullish, and then we can look for that movement. Because what that change of character can signal, remember, a chalk just tells us that there might be an internal pullback. It's only when we get the IBOS that then the swing pullback is finished, is over, right? So that's the thing. So if we play this forward, then what happens? Chop around, not much going on, and then we dump down, right? But we're not surprised. Why? Because we understand that order flow is bearish. So then we get another, draw it on, if I can get the tool, internal breaker structure to the downside, right? So we had what? We had a lower low, lower high, lower low, mitigated that prior range, right? This being that strong internal lower high, and now we've continued that movement to the downside, right? So then we have this, supply range here. Okay, so now what we'd want to see is what? We would want to see, this would be our IBOS line. We would want to see that go for there to be a bullish IBOS to disrupt the bearish order flow, right? You can see the series of mitigations there. So we've pushed deeper into the zone. We've actually swept the zones. We've actually broken lower, but we know there can be orders within here. So we can move this out of the way, right? Potentially we've swept some liquidity below this low. Let's see what's going on. Okay, we're going to close. Yeah, nice big bullish close. So that's a bullish breaker structure. Sweep of liquidity. Bang on London Open, 8 a.m. Right? The order flow has now shifted from bearish to bullish. Right? Put us forward a bit. And we moved up. So now how you can see, getting long from in here now is much higher probability, bring it back a candle, than beforehand. It's not to say that you can't drop down to M1 as soon as we come in. And it's not to say that you can't look for longs after a chock, but it's just about understanding what's going on. In this instance, you can see that order flow is bearish. It's very likely we're just pulling into here and then to potentially continue lower. But once that then shifts, right, and you break and close above that high, now the internal structure and order flow is aligned with the swing structure, and that's when it becomes much, much higher probability to get involved, right? And then you could literally, you don't even have to go down to the M1, right? You've now got a high probability M15 confirmation entry with order flow on your side, and you can get in long, right? Even if you enter on the distal, let's see, decent risk reward up into the swing high, etc., or you can refine it to EQ, blah, 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 right? We're not gonna get into entry models now. And yeah, you can get into the trade and away we go, right? So I'm not even gonna drop down to M1. You guys know the entry models and stuff. It's more just about understanding how we can utilize this with our analysis of the higher time frames, right? So then, we get another IBOS here. And then what would we expect? We would expect potentially this was bearish. Now you can draw it like this, from bearish to bullish, right? From where we then break out, that demand range then gets mitigated. And then we have this range here, which hasn't been mitigated, but remember, price doesn't have to pull back, especially when momentum is strong. And then we had one here, right? And then that could have been your continuation, right? Could have looked for an aggressive continuation within here, right? Getting long in within here. Go and drop down on the M1 entry models to see if you can see anything within there. Now at this point, we start to pull back, but what would I be expecting? Well, look at the swings in price. Bullish order flow, break up, and then one leg up here. So I would be expecting that price could come all the way down to this strong internal low and still continue bullish order flow. Yes, there is some little pullbacks here, but I would just view that as small internal structure of the larger internal structure, right? So let's, play this forward. We have some demand zones within here. We could be looking at this decisional demand. I'd obviously be aware that there's an unmitigated wick as well. Let's get rid of this for a minute. And then we can expect price to potentially pull back into here. Comes into here, and then again, we can look for longs, right? To get involved, etc., target the weak internal high. And now we have what? A new demand range. I realize I'm talking with a really annoying voice. So apologies for that. I'll try and stop doing that. But it's because I'm trying to talk slowly whilst I draw. My fingers are not as quick as my voice. So yeah, and then we just continue that. Obviously, this isn't a foolproof model. At some point, it's going to fail. You need to take everything else in consideration. We haven't looked at higher time frames. We haven't looked at where we are, etc. We've got extreme supply, even though it's a weak high. You obviously have to take into account other confidence, but it's about using this framework and understanding what can happen, right? Because now, we know the new range we are within. The internal range would be this low and this low. So this then becomes your protected internal low. That then become your next sort of high probable area to potentially look for some longs from, right? And we pull back. And then, you can play around with this internal structure as well. If you know ultimately price is probably going to want to come down to mitigate this range, you can trade within that. We get this obviously internal within internal structure. So we have a bearish movement within here. Let's do that and get rid of the lines, right? And then see what happens. We pull back. So this is what I mean. You could, in theory, if you wanted to, if you really want to look at the bigger one, so we can get a bit more advanced. Keep talking like that. I need to really stop doing it. It's really hard. And then from, you've got ranges within ranges, and this is where, you can look at those ones, you can look at these ones, and this one we'll get a bit more into, but I kind of want you to just focus on the main thing I'm getting here is keeping it simple, looking from the pro trend swing longs, and then following the bullish internal structure, right? Higher high, internal higher low, internal higher high, and then ultimately we're looking for that. but you've got the internal structure that's bearish within that. So like, let's say we want to get long from here, we use the same concept as we did before to try and get our strike rate as high as possible. Of course, as soon as price comes down into here, we could look on the M1. Do we get a break there? Not yet. Now we do. If that closes. No, it doesn't. But essentially, let's see. How does that go? I can't even remember now. But you can see the bearish order flow kicking in, right? The internal of the internal. But ultimately, we're still within what? We're within this bullish range. And that's why if you're selling these supply ranges, you have to be aware of the bigger picture. Because ultimately, you're expecting this to be a strong internal low. And this is why you might want to label all of these, and that being the weak internal high. And that being the weak swing high. It doesn't mean they're going to get run, but that's the framework that we use to bring a method to the madness, because ultimately this looks like quite choppy sideways price action, which is what it is. But when you have that framework, right, so what happens here? Chop around, chop around, chop around. And this is what I mean. Ultimately, it's a big range bound condition, so it's not high probability at all, but we can use these to make some sense of it. So like I was saying, at this point here, that would be ultimately our target, and we would expect this to hold. But right now, the internal of the internal is within this range, right? So it's not until this range goes that then technically we would then have the internal of the internal aligned, right? So this leg would then be aligned with this leg, right? Once we break this high, then we can expect those bullish ranges to hold until that high is taken out. Okay, and this is why it's quite messy, but it's there. And obviously there's smaller ranges within that. Like, you could start to trade, especially as we come into this strong level, you can start to trade this smaller order flow within it. Whoops. So from that low there, zoom in a bit. All right, and then from that high to that low, and then that high to there, where it breaks out the range. All right, and then you got another one here. And you can be trading all of this. You just have to manage your expectations of what's going on, how far to push price, and how much confidence you're going to wait for. And then, yeah, that would be that range that we'd be coming back into. Right, so it continues. Right, so then that gives us another demand range. But now we have to be aware what? We're coming into, this is a strong high. This is the internal of the internal. But ultimately, what do we expect? We expect this range, this larger range, is stronger than this internal range. Sorry, this internal range, right? And then this swing range is stronger than all of them, right? So the swing range is the strongest, and that's bullish. So we expect this weak high to go. Then we have this larger internal range, which is the next strongest. And then we have the smaller bearish internal range, right? Which is the next strongest. And then within that larger internal range, what do we have? We have these small bullish ranges now, where we switch to bullish, right? So at this point, we're coming up into what is a strong high. But it's only once this small green structure here, right, if it was to shift bearish, at this point, then what would you expect? Then we know that this low has failed to take out the high, and order flow, these small order flows switch bearish. So then we would expect that order flow to stay bearish until that low goes. Whereas if this small green order flow continues and we take out that high, then what's happened? Then we've broken bullish here, and then we'd expect that larger order flow to stay bullish until it takes out this high, right? And then that would be that larger green structure, which we then expect to hold until it takes out the swing high, right? And you can understand this, that's the fractal nature of it, but all in one time frame, because we've got one big massive range. So let's play this forward a bit. So then we break out to the upside, all right, giving us another range. Just rein this in for a minute to where it broke. Okay, and then we continue up, so we have another range. And then what happens? So we come back into the range, and then we break out of it. So you see how we break the low of the range? So what's happened here? So let's draw on this on as our supply. Just see what's going on. So from the high to the low, and we drag it across. So we can see that this bullish order flow is being disrupted. Did we get a bullish IBOS? No, we failed to close above it. So this is where now we can hypothesize that that's likely going to be a sweep. This small internal order flow has now shifted bearish. It's failed so far. I mean, it did price to break above, but it's failed to close. So now with our framework, right, this now could be weak. The order flow has shifted bearish. So now we could expect these ranges to hold until this low goes. So now we move down, we pull back, and we break out. And it goes in one big sweep. I think there was news or something that day, right? So I'll leave that there. That's the framework, but you can see how you can start to build the story. So you can make it as complex as you want and look at all of these little ranges within ranges within ranges. But the main one I wanted to focus on was the first sort of 5-10 minutes of this video, where like, you know, we have our high probability POI. We're well within our rights to be looking for an M1 as soon as it gets in, right? But it's about understanding when you want to wait for a bit more confidence, right? Whether that be your first level being more just a bullish M15 chalk rather than M1 as soon as we get here. So we got that there, but that ultimately would have led to probably a break even or a loss, right? Let's just call it a loss. So then we had, remember at that point we had this supply range, but then we broke out of it and we got the bullish IBOS, which then gave us this green demand range here, right? Price then broke out of that, giving us a bullish IBOS. Now it's aligned with swing structure, so now we can start to target this weak high, right? So then we get that pullback, we get that big movement up here, we get the pullback, we protect that strong low, it doesn't get breached, and then we get another one. So then we're within what? We're within the larger internal range. So then we expect that this low should hold, okay? So then we get bearish order flow within that, right? And even within that, you can see the smaller ranges, right? There's obviously more to it. Again, another one. So we get the larger, or the smaller internal order flow of the large internal order flow. And again, within that, right, you can trade these. On the M1, there's enough room whenever you got to manage your expectations that potentially this high could hold to continue that red order flow, right? And tries to break out the high. As soon as it fails to break and goes above, then we get the bearish order flow. We pull back into that new supply range, and then we end up taking that low and then sweeping this low, right? So yeah, obviously some environments can get a bit more choppy and complex, but this is how you can make some method of the madness. So hopefully that makes sense as always. If you have any questions, fire them in, and I'll leave that there. Cheers, guys. So let's just dive a little bit deeper into sort of the very specific case of trading against order flow. Now, again, obviously there can be a lot of variables to this, where we are within the higher timeframes, what all of the timeframes are doing, et cetera, et cetera, et cetera. So I just want to give you kind of just one very sort of, basic premise in sort of which to apply it. And that is basically, if you're going to get in, let's say on the M1, and you are trading against the bearish M15 order flow, right? But you're anticipating that the M15 order flow is going to shift bullish, right? But instead of waiting for the order flow to shift bullish, so this would be your IBOS, right? So you've had a series of larger internal lower lows and lower highs and lower lows and lower highs and lower lows. But we've come into, let's say, the extreme swing demand level, and we're expecting that next swing high low to go. And this is a high probable area to get in long, okay? Ideally, we want to be doing it before price gets up to here, right? Before it gets to that protected / strong internal lower high, right? This is what I was trying to say in the advanced video, but this is a bit more of a better visual representation, right? So we can come into level, we see our entry model, etc., and we want to get in long here. Ideally, it tags us in straight away, because then when price moves up and we're running in profit, now we can either take partials, we can remove our risk, we can trail our stop loss, but essentially remove our risk is the point I'm trying to make, because then what can happen, obviously, is that bearish order flow can continue. And what I see happening far too often is people get in maybe in good areas, or they see the entry model set up, but maybe like price doesn't pull back and it goes straight up first. Then they draw on this, they go, okay, well, we've had a bullish M15 chalk in our extreme M15 zone, or even just an M1 chalk, but it's a great level. But then price comes down, right? And then it smashes them out. And the reason why is it's because we've come up and we've mitigated the supply range, bearish order flow has not been broken, and we've gone off. Now, obviously that doesn't have to happen. There can be times in which it works out, but this is just to try and improve your strike rate as much as possible. So if price goes up like this and it doesn't tag you in initially, okay, what are some things you can look for in this instance? So what I mean by that is price has come up and it's come back down, right? So at this point, as it's coming back down, you really want to get long because you have a high conviction this move is going to go. But what can we wait for in this instance if we didn't get tagged in here, right? Because now we don't want to be buying against this, right? So sort of three sort of main things you can wait for, and I've listed them here, 1, 2, 3, sort of in order of, I guess, probability as well, right? So the highest probable one is we just sit on our hands and we wait. And ideally what we wait for is we wait for that bullish IBOS, we wait for the bearish order flow to be disrupted, so then we are buying with the internal structure aligned with the swing structure. That's always going to be the highest probable thing. But obviously sometimes if we're working within a smaller range, we might there might not be enough room. Sometimes it can go, it can have a little pullback and it can just go and we don't get in, etc., etc., right? More confirmation doesn't always mean you're going to get in the trade. Okay, so that's going to be the most ideal, is you wait for order flow to shift on your side. Cool. The second one is you wait for the week low to be run. So what do I mean by that? Well, I mean, as we come up here and we start coming down, right, this is that week larger internal low. So instead of just trying to set a limit on here and buy from it, what you can wait for is you can wait for price to actually break it. Because sometimes what you'll see is price will break it. It will mitigate some orders deeper in that extreme zone, right? And it will sweep this low and then give us our entry model, right? Say on the M1, and then we can get in long, right? We've waited for that low to go. You want to see it get swept first before then trying to trade it. So now you're in long. Now not worst case scenario, but like, let's just imagine it's just a pullback. At least then you can remove your risk. Maybe that internal lower high stays and it continues, but you've got in at the start of that pullback that you're hoping is going to turn into what? Turn into the IBOS. Right, so that's your second option. So first option is always going to be the most ideal one, which is you simply just wait for the bullish IBOS, then you buy here with the internal structure. The second option when it's coming back down is you just wait for this week low to be run. And then once it's broken, right, if you get the next entry model, like, all the other confidence being present, you can get in long here, right? And then at least if, again, like I said, if the larger bearish order flow stays bearish, at least you're basically playing that pullback, you can remove your risk. And then if it comes back down, right, you're fine, you've covered yourself. But it could turn into that movement because that's the movement we're looking for. Right, so that's your second option. So that's what I mean, play the pullback with the potential that order flow could switch bullish. That's when you've let that week run go, that week low go. And then your most sort of lowest probability one would be wait for the lower time frame order flow to switch bullish. So what I mean by that is that price comes into this extreme zone, you're not setting your limit here, right? But you're anticipating or hoping that if price comes into here, and then you see a shift in order flow like this, right? Now you could buy that because you're basically paying a confirmation entry of the extreme zone from a weak leg, right? So this isn't ideal because you could still get that signal. It's like a trap and then it just gets smashed, right? And then the move goes. And that's really why that's the worst option, but they can play out. Okay, so these are things that are a bit more advanced, but there's some, some scenarios for you to think of. But yeah, they're definitely in order of importance. So let's take a look at sort of a typical example of, well, just how order flow can potentially, help us to avoid some losses by, when we can trade against it and sort of when we should maybe decide not to and wait to sit on our hands to see if it will shift in our favor first or not. So let's do some super quick hard time frame analysis. The 4 hour was bearish and then we had a nice big break of swing structure there to the upside. So we are bullish, but we've had obviously a break of structure. What do we expect after a break of swing structure? We expect a swing pullback. We have had a 4 hour bearish change of character, right? So we're just taking that low there. So we have to, assume that that's the first potential sign that we're seeing weakness come into structure and we could see that pullback. But for now, that shock, right, what that could just little be is a pullback into this sort of smaller internal low and this demand could hold and we could, get a bit more of a bullish continuation, right? So if we jump down to the M15, let's quickly see what swing structure we are working within. So M15 swing, that would be that last break there. I think we failed to close above that high. Let's have a quick double check. Yeah, so that was a sweep of liquidity. And then we had a bearish break of structure there to the downside. So we know from a M15 swing perspective that the M15 is now bearish. We've had a 4 hour change of character. So there's a lot of signs coming in, and obviously it's quite rush analysis because there's a lot more we could look at here that would probably, there's increased probability that that larger 4 hour pullback, that swing pullback could be starting to kick in. So if we were to draw on that M15 swing range, we know we have that as well. And then we have the smaller internal ranges within that, right, that we can see. If I just kind of draw on the recent ones, but you can see from Asia, so that's midnight, it's just been continuously selling up. We've had order flow clearly bearish this entire time. Nice sustained textbook bearish order flow really. Now we're coming into that 4 hour level. So, there's potential that this could continue, or at least, the very least, we could see an M15 swing pullback into the prior swing range because we know that this is our strong swing high and we look to play that move. So what would be the most aggressive way, I guess, of trading this once we come into, we've got let's see, what did we mitigate? Yeah, we've got refined M15 demand within the 4-hour demand zone. So most aggressive way is to jump into an M1 entry. So if you get your M1 entry, what we were saying before, right, is, if this meets your plan, that is, ideally, if you're going to do that, in terms of order flow, you want to be doing it where you can get in before price really pulls into that prior range, because if you can get in and then price pulls back up, you can remove your risk. Whereas if price pulls back up to it and then is coming down, right, there's been no break of structure, no disruption of that bearish order flow. Now you're trying to trade against that, right? 9 times out of 10, this week low is going to get smashed and you're just taking unnecessary losses, okay? Cool. Other thing we can do, or typically wait for, is to wait for a bullish change of character on the M15. All right, so that clearly fails. And then we get a nice change of character here, right? Cool. So now we could start to look for entry. So let's dive down to the M1 and go, okay, basically what we're doing here is we know the M15 is bearish, but the 4 hours bullish and it's coming to 4-hour demand, and we've had a bullish M15 change of character. Therefore, we could look for some longs from within here to at least play potentially an M15 pullback, right? That's kind of the general basic logic behind looking for longs from here, right? So we know within 4-hour demand, we're just going to rein it in so we can focus on price. So we've had that bullish change of character here on the M15, all right? Now, if we look at the order flow on the M1, let's do lower time frame supply, right? So that was kind of like that last supply range that we had. And then we broke up to the upside. So from that last range, from the high to the low, drag it across is obviously demand. So lower time frame demand. And then what did? Range initiation, mitigation. So we actually came in, did we mitigate the smaller range without that? Yeah, just about. So obviously there's ranges within ranges, but the larger one is the one, that's the obvious one, right? And then again, from that high down to that low, that's the next M1 swing range, and then break out of that. And then we break out of this, and then we get that M15 bullish. Wait, what happens here? A bit of a gap, change of character. Oh, okay, so let me just play this forward a bit. So I don't know why the candles changed it. It's kind of messed around there a bit, but let's have a look at the M15. What's going on there? It wasn't like this in the live market, I can tell you that. So we definitely did get a bullish change of character. I think they just messed around with the price data here a bit. So it's kind of messed up the order of the explanation I was going to give. There we go. See, here we go. But essentially, let's bring it back. We can try and do it as I wanted to do it. Hopefully it doesn't mess up again. Is it going to mess up? No. So at this point here, we had the bullish M15 chart, right? Now, if you're going to look for longs and you didn't have all of this drawn on, typically, there's kind of 3 levels in terms of POIs on the M1 that you could look at. So let's draw those on first. So you got this level here. You got this unmitigated level here. All right, and then you got this unmitigated level here. Now, really, from an order flow perspective, the only one that makes sense if you like everything and if you wanted to get long, really is the nearest one. Because we know we have this bullish order flow. So as prices are coming back in, this should be a strong protected, M1 internal low. Obviously, we don't want to read too much in just to the M1 on its own, but in terms of if you're happy with everything else you've seen in the higher time frames, if this was a type of trade you would like, in my opinion, it's not that great, but if you would like it, really, in my opinion, this is the where that's going to make sense, and you would at least just target that week high, right? And then ideally try and remove your risk and see if that bullish order flow will to continue. Now, the reason why that is the highest probability one, is because if price was to come down and we get a disruption of that bullish order flow, especially if we get a closure below and that IBOS, right? Then what? Then we would expect that bearish order flow to continue until what? Until it takes out this week low. At that point, the start of this trend has essentially ended and failed, and now this is going to come down and take out that low there. So when we move it forward, as you can probably guess, we get that break and closure below, which now means that from the low to the high, we now have our supply range. Okay, just going to rein this in. So now anyone getting long from here, right? Boom, yes, I'm in profit. Going to pass my FTMO challenge. Tell mum I've quit my job, like blah, blah, blah. Right? Oh, damn, why did I get smashed? I thought, M15 shocking for our demand. Well, it's because order flow is now against you and it is bearish. Obviously, there's more to it with the other confluence and stuff. It's not necessarily the best area in the world to be getting long from, but the point I'm trying to drive home here really is about the order flow. Just going to rein this in, just do it where it broke, right? And then again, it could come into the extreme. Now, don't get me wrong. These zones could play out. It's not to say that we're, again, still working with probabilities here, but this is just a framework in which we can use to understand why if we get long from here or we see price bounce from here, it's likely what? Just to produce a pullback into the prior range to then go. So what would we want to see? We would want to see that range get disrupted, ideally that movement there, and then potentially we could look for longs, right? All those things considered, right? That's the type of thing you would want to see. So let's see what happens. Bit of a bounce again, think it's going to work, it's going to work. Okay, nice reaction. And then I get smashed. Why? Well, because order flow has just continued to be bearish that entire time, right? So that's just some things, you can wait for, especially if, it's just always as simple as prices come into a level. We've got an M15 shock. Okay, now I'm going to get long from these levels, and then now I'm down -3R, and I hate this. This sucks. Screw trading. These are the types of things that you can wait for a bit more confidence in this instance, right? Wait for order flow to shift back in your favor. Ideally, we get that break, and then potentially you could look for longs from within here. Okay. So even if we had got price came down into here, right, and it gave us an M1 shock. Right, that shock is just what? It just signals an internal pullback. It's just going to signal that move. Doesn't necessarily mean that we're going to get that. Now, you might want to take that, and that might be fine because you could love everything else. But it's just understand that's only once you get the IBOS, and then we expect those, that shift in order flow to really hold and continue to the upside. So that can potentially help you understand some of your losses. So yeah, I definitely recommend going back through some of your recent trades. Map this on the charts, especially if you've still got the TradingView data, if it's still there in the live charts, and go back and just really investigate and use these concepts and see if they can potentially help you avoid some losses or not. So now we're going to apply these concepts, but we're going to start to bring in sort of more multi-time frame analysis. So we're going to go through a few price action examples that we went through before in the advanced market structure module where we did that walkthrough. My intention is to not make this video as long as that, so you're not going to have to sit through 2 hours of it. I'm just going to go through a few examples, make sure you guys are kind of comfortable, I guess, with the framework that we're using, and then I want you guys to then go away and obviously practice it yourself. So without further ado, let's just dive into it. So daily chart, let's make sure we kind of know what swing structures we are playing within. So this was, one big clear swing push down, so we can be pretty confident that that is our nice swing low. Price then came up to the upside, but it failed to break and close above our swing high, right? So therefore, we then got a continuation of that daily bearish swing trend. So, if we continue to draw on our bearish bosses as we usually do, and we know where our swing highs and our swing lows are, what I was saying before, right, is market structure and order flow in the form of supply and demand ranges, they're all one and the same thing. They are all slightly different techniques of literally showing you orders going through the market and where supply or demand is in control, right? So, very simple. It's easier rather than just words, just to visualize it on the charts. That's what we're drawing onto this price action to make sense of it. So what I mean by that is if you draw from the swing low, right, to the swing high of that range, and you drag it across to where you break, right, that was that swing range there. And that is just one big supply range. And that's it. We already knew that with market structure, right? When we would put on our, pretty circle for our swing low and our pretty circle for our swing high. And then, we would drag, when we did the box tool, right, to know where our swing high was, we drag it across to where it was broken. Where's the highest point that took out the low after it was printed? That's our swing high. Well, again, it's just another way of visualizing that's our whole supply range. So then when price pulls back, we expect this supply range to hold, i.e. we expect that strong high to hold and that strong low, that weak low to then be targeted. So then we get a continuation of that trend. Let's get rid of these circles first. That's not going to work, so we have to draw another box from the low to the high, right? Drag it across, and we can see the continuation, of that overall bearish order flow. And again, we get another break of structure, and then that brings us to the current range that we are within. Obviously, then there's another small one there as well. So for me, I'm classifying this as one big push down. When we look at the recent price action, we can see we had a leg down, pull back up, leg down, pull back up, leg down, swing, pull back up, right? And then classifying that as one leg down, and that's more of a 4-hour pullback. So what does that bring us to the current point in terms of just thinking about the daily chart and order flow? Well, if this, let's use the highlighter tool because it'll be a little bit easier to see the swings. Swing high, swing low, daily swing low, daily swing high. And then this is, we're trying to find out where that lower low is going to be in the daily chart when we actually get that significant daily pullback. So at this point, if I was, looking for that, it would only be once. So remember, let's think about it this way. After a break of structure, what did we always say? We would say that a change of character would signal that a swing pullback is about to start. Right? Now, whilst that is still true, what are we using now? We are now saying that a CHOC is simply just to signal an internal pullback. So if we were to get a little, pullback like that, like 1 or 2 candles of that, and then price broke up to the upside, okay, that would be a daily change of character. And that's the first aggressive signal that we may be getting that daily pullback to then continue that overall daily bearish swing trend. But for now, or how we use it now, is a change of character simply just signals that we're getting an internal pullback. Okay, so this here would be our last daily internal pullback, right? That would be there your daily bearish internal break of structure, your daily IBOS. So if we were to then get a little daily CHOC like this, right, that would just signal a pullback into this level here. So this would be your strong daily internal high, right? So if we get a daily change of character, that's just what we would assume. We're probably just getting a pullback into this level, and then we would look for a daily bearish CHOC to confirm that this strong internal high is holding, and then we would target this daily weak internal low, right? And that's essentially just what we've been using with advanced market structure. So then if we were to get a move like this, that then broke the daily strong internal high, then that would be our sort of true confirmation that now we're going to get that daily swing pullback, right? And we would look at the daily internal structure like this, okay? Now we could come up into this extreme daily swing high, and what would we expect? We would expect this daily swing high to be strong, for it to be protected, for price not to break it, because we expect the daily bearish swing trend to continue until it doesn't, right? That's the basic framework we've always used, okay? So as price then comes up into this extreme daily supply zone, right? Now let's say we get like 1 or 2 candles, like a tiny little pullback, which we now call a fractal pullback, right? Price moves up and then we get that CHOC. So you guys should be very familiar with that. Before we would say, okay, we've had a change of character, we're in a daily extreme. Now it's all systems go to target that weak daily swing low to get that daily swing lower low, right? But now we know, or the way we're reviewing it, is that although that is that first sign that that may happen and the daily lower high is formed and now we can target a lower low, at this point we don't, I'm not going to get short and just hold full volume to hit. Because at this point, all I assume, or all I use that change of character signal as, is it's just to have a pullback to this low here. Why is that? Well, if we say that that's the internal structure, okay, so we can use these lines here. I'm going to try and take this slow so you guys can follow me. I know some of you already know exactly what I'm getting on it here, but so let's take this again, right? So I was saying that that was the daily internal pullback. All right, so this is currently the daily swing high. We're about to form that daily swing low at some point. If price then breaks up and takes out this daily internal high, the daily internal structure is now bullish. Okay, so then we can look at all of these bullish IBOSes, right, as the daily then has that bullish swing trend pullback. Now, if it comes up here and then gives us a little change of character, right, so make that like that. Let's use these dots. So this is like the internal structure. Okay, that's not going to work for me, so I'm not going to bother with that. It's still a bit glitchy in TradingView. But essentially the point I'm trying to make here is that that change of character just signals that we're having a pullback to what? To this strong internal low. Because all of these, right, it's the same theory. This is a weak high because it failed to break any low, right? This is a strong low because it broke the high. So when we get that internal push up here and price is pulling back, we expect this low to hold. We expect it to not break. Likewise, we get another internal break of structure and then price starts pulling back. We expect this low to hold, right? This internal low. So then when my price moves up into this extreme, okay, we still expect, just purely thinking about this on its own, we still expect this to be a strong internal low, but obviously there's a higher probability that this low could now break, even though we still call it strong, because of where we're coming into, and because swing structure is the strongest form of structure, right? Its swing is the strongest, then your internal, and then maybe you have a smaller internal, and then obviously then if you have your fractal. So in this case, let's keep it simple, 3 types of structure. We have swing, that's the strongest, then we have the larger internal, and then we have fractal, which is what we look at for CHOC, where we're looking at the little candlestick movements, okay? So as we come up into that extreme, we can start to think and look to position ourselves that the daily swing lower high may form, and we can target this weak low. But a change of character does not give us that true signal yet, because a change of character just signals an internal pullback, right? It doesn't signal a swing pullback anymore. Now we just say that it signals that internal pullback. So price could easily just come into this strong daily internal low, right? And then it could give us what? It could give us a bullish daily change of character within here. And then we would be aligned to go, okay, this internal low is probably holding, and now we can target this weak daily internal high, right? And that's basically the framework we are using. But once we get, or if we get a break of this strong daily internal low, it's only at that point, once we get that break, that okay, now we can say that it's likely the swing pullback is over, and now we can take out this low, right? So a change of character signals an internal pullback, and then we could get another one, and then that would be the end of the internal pullback, and then we can target the weak internal high. That's the change of character. An IBOS, when we get the change of trend, the change of the internal trend, right, the larger internal swings, that is then what signals the end of the swing pullback, and then potentially the start of that new swing run, right? So this IBOS here, when the internal structure shifted from bearish, right, that's a bearish IBOS, that's a bearish IBOS, then we get the bullish IBOS. Now that signals the start of the swing pullback, okay? So if we got the little change of character down here, that just signals the internal pullback into this high. It doesn't signal the start of the swing pullback. You can still view that as the start of the potential of it, but it's only when we get confirmation. The internal structure is what gives us the confirmation of that. Okay. Now, really, hopefully, you should have been hopefully comfortable with or fully understand what I've just spoken through so far from the advanced market structure module, but I just want to go over it again and again so it really, really starts to sink in. Okay. So that's the advanced market structure concepts or frameworks we've been using. Basically the exact same thing we've always been looking at. It's just all we've added in is the larger internal swings, right? Which we're now referring to as IBOS and all that stuff, okay? Cool. So if that was happening, now we're going to overlay order flow, right? So at this point, let's concentrate just on the price action that we actually have. We know we've had what? We've had a daily break of swing structure. So at any point after that happens, we have to have in the back of our minds that a daily swing pullback can be happening. Now, obviously, price can fall a fair amount before that happens, but we have to still be thinking that that could happen. So at this point, we've had our last bearish internal break of structure, which also gives us this internal supply range, right? So what we want to see is we want to see that order flow shift. We want to see that order flow shift from bearish to bullish. We want to get that bullish IBOS. And then if that happens, we would then have what? We would have a series of higher time frame demand ranges where we could then draw that from the low to the high of where it would be broken, right? You can rein that in if you want to have nice chart OCD like me, and then you can continue to draw these ranges. And what would we expect? We would expect these demand ranges to continue to hold, right? Until they don't, essentially. So then we come up here. I need to turn drawing mode off, can't use that. Cool, so that's pretty much it, right? So it's the same way we would view it as structure. We would expect that internal trend to continue until it doesn't. Obviously, we can use other confluence to anticipate when that may change, i.e. coming into the strong daily swing high, early sign of the change of character, et cetera, multi-time frame analysis, right? If this was overlaid with a weekly supply zone, right? They're all the things that we can use as early signals, but when we're just trying to use a simple framework, this is it. So then when that does change, then what happens? Then we go from having bullish order flow to now having the start of bearish order flow, where we draw it from the internal low to the internal high, drag it across to where it's broken. And now, still not going to let me do that. Drag them across. Now we would expect these daily supply ranges to hold until we get down to the bottom of this swing low, right? And that'll be it. So I realized, some of you probably rolling your eyes at this point, come on, get on with it. But I really feel like it's important, especially for anyone who hasn't quite got it yet, that this is as simple as the framework needs to be. So just really wrap your head around it on one time frame, kind of what each rule means and the hierarchy of structure. So swing structure is your most important. So we're essentially expecting like the overall move that we're looking for, because we've had that swing push down. We'll then be looking to trade the swing pull back to then trade the next pro trend swing run to the downside, right? So let's make that say blue for our swing structure. Within that, we'll have that larger internal structure, right? And we can map these supply and demand ranges within that. And when we get the bearish IBOS, that's when we get true confirmation that, it's likely we're going to get that next swing run to the downside, and we can target the weak swing low, right? And then we can use CHOC as an early signal that that swing move is going to go. But really at that point, we only have confirmation that we're getting an internal pullback, potentially just into this strong low, and it could continue that movement and we could switch, bullish. Okay, so I really wanted to just get that very, very clear that that's kind of as complicated as it needs to be in terms of that. Obviously, as we go into the live market and then you start to overlay this with multiple timeframes, whether it's even just 2 timeframes or 3 timeframes, and you start to look at the M1, things are moving quickly. You can get a lot of conflicting biases because you can have, the overall swing is bearish on a daily chart, but then you've got bullish internal at this point, and then the 4 hours doing one thing, the M15 is doing another thing. And that's where you can get almost paralysis analysis. So that's why, let's go through a few chart examples, but I spoke about this on the meetup. I believe that was on Monday, the 7th of June. If you guys haven't seen that already, where or maybe it was a Tuesday, I think, where I was basically trying to say, these concepts are here to help us to add to what we're already doing, which is focusing on trying to catch the highest probability kind of swing points, right, within the internal structure or within the swing high or low, rather than trying to trade every little single piece of movement. Because whilst we may have a better understanding of those tiny internal swings and where price is likely to go, doesn't mean it should be, we're trying to trade every opportunity, right? We still need risk to reward to be on our side, and we still want to be trading those, those high probable areas. But anyway, you guys should now be hopefully familiar with this framework. So let's dive into price action as it goes, and we'll kind of go from there, okay? So at this point, daily swings bearish, daily internals bearish, and that's where we're at with that. So we would just expect, although we're ready for that swing pullback to happen, at this point, we won't assume it's going to happen until we would get something like that, where we would get that bullish internal daily break of structure, right? And then we would get that shift in daily order flow, and then we'd anticipate that we'd get a pullback potentially into that prior daily supply range, right? And then we would look for the order flow to then switch bearish, and then we target that low. That's it. That's the framework we're using. That's what you should be comfortable with from advanced market structure, but now we're overlaying these boxes. Sweet. So let's jump down to the 4-hour chart. And as you've probably guessed, 4-hour swing structure is not always, but it's very likely going to be basically that larger daily internal structure. That's what we're viewing by one time frame. And this is why I was saying, if your trading view for whatever reason froze and you were stuck on one time frame, you'll be able to do all of this multi-time frame analysis literally from one time frame if you zoom out enough. And you can kind of visualize that. So I'm just going to hide that daily line, and then we can draw on the most recent 4-hour swing structure here. Okay. And then let's put on our pretty little circles with our 4-hour template. Cool. So that's our swing high. So annoying that it won't let me drag and drop. This is our swing low. So yeah, this is the current swing range we are within, right? So let's put this and try and do some more lines just to kind of help us keep track of everything, as it can get a little bit confusing. So that is our 4-hour strong swing high. Hopefully that text is big enough to see on your guys' screens. Okay, so at this point, we don't have anything on the 4-hour chart. We're literally just moving to the downside. We obviously know this is that daily range. So yeah, let's just kind of keep it simple and leave it like that for now. Obviously, we will have some supply zones within here, but let's jump down to the 15-minute and see if we can look for that potential shift to play that 4-hour pullback up into this 4-hour swing level, right? So jump down to the 15, and where is our current swing range? So this would be our last M15 break of structure, right? You guys should be pretty familiar with this from the last advanced market structure walkthrough. So this will be our swing high. And yeah, until we don't know where the swing low is, until we have a significant swing pullback. So we can call this an internal break of structure. Not the most significant, but in terms of recent price action, that's what we have to work with. So if we were going to look for that swing pullback to go at this point, we would need this high to break, right? That would be the high that we would be looking to go. This is our current bearish order flow that we can see is holding. So we have our medium time frame supply range, right, from the low to the high. So that's the prior supply range that we'd expect price to probably have a swing pullback into. And then we also have the continuation of that internal bearish order flow as well, okay? So let's speed this up a little bit, and then let's go through some actual price examples and see what happens. So we're just moving sideways at this point, and then we get that bullish internal break of structure, which is also where the actual chalk line would be, which obviously sometimes may happen, and that is now signaling that we are having our swing pullback. So now we've had a decent sized pullback. I can classify that as our M15 swing low. So at this point, right, let's think about it. Just keep it to one time frame so we can keep it nice and simple. We have an M15 strong swing high, and we have, this would be our weak M15 swing low, okay? We've had a bullish internal break of structure, which is also where the change of character line was. So now we have good solid confirmation that we are pulling back, right? We're pretty much already in the premium, okay? So from an order flow perspective, what has happened? We've had the shift from bearish order flow has now shifted from bullish, because if we draw the current range, which is from that high to that low, and we drag it across, price then broke to the upside, okay? So now we have some demand. Okay, so what's the expectation? Well, the expectation is that we'll get a continuation of that bullish internal order flow. Let's move this out of the way, right? We may come into the extreme, and then we may get a little change of character. Now at that point, that's our first aggressive signal that we can then target the weak swing low. It's the change of character would be the first signal that potentially the swing pullback is over, and we can target that swing low. So we can get in shorts, right? With the expectation that maybe we can get down here. But as you guys should know, the chalk only really confirms that we're just getting an internal pullback, right? So at this point, this is a strong internal low. So what could price do? It could come in, it could give a change of character, and then we could target that weak high. But if we were to get a break of that internal structure, then what would we expect? We would expect, after having these demand ranges, and I'm going to draw it again, and I know some of you guys probably have this completely nailed, but we just have to drill it into our minds, right? Until we get really, really used to it, because there will be more complex scenarios. So at that point, right, where we get the change of character up here, we just expect an internal pullback into this strong internal low. But then if we do get that M15 IBOS there, then what we'd expect? Then we would expect these supply ranges to hold the whole way down, right? Until, there we go. Well, let me drag and drop these ones. That's a bit easier. I can speed things up until down here, right? Again, that's the framework we're running with, okay? I won't go over that again in that much, drawing it all out, because hopefully you should be familiar with it now. So that's literally what will be going through my mind if I'm looking at this and how we're kind of trying to use these concepts to help us make trading decisions. So let's play this forward a little bit and let's see what happens. So obviously we've had this quite large internal demand range. So we've had initiation out of the range. So what do we expect? Do we expect price to pull back into it, mitigate it and continue, which is price is pulling back into it now and then continues to the upside, okay? So we have these smaller little ranges as well, right? From the high to the low, drag it across, price then breaks out. And then again, you have to zoom in a little bit here to see it. But this is looking at the fractal structure. We get these very small ranges because this candle fails to break the prior candle's high. So we do get a pullback there, right? And then price breaks out. And then what happens? And then we get a break of that little flow, right? So this is where we get that M15 change of character. All right, we have an M15 chop because we got a little movement up, little movement down, movement up, and then we take the low, right? So that there is an M15 chalk. So now we also have that small bullish order flow changes to supply from the low to the high, drag it across, and it breaks out to the downside. So this is a potential indication, like we were saying, that that swing pullback could have ended, that the bullish order flow has been disrupted, and now potentially what? We've got to have supply ranges that will hold until the low goes. Well, as you guys should know from the advanced market structure module, it's not quite as simple as that, because obviously we have a much larger movement like this, up, down, up. And now we get these little movements here, right? And then that's been disrupted, but that could be just what? Just to pull back into this movement here, into this larger range, because yes, it mitigated it here a little bit, but obviously sometimes it's going to want to pull back much deeper into these larger ranges, right? And then have a disruption of that small order flow and then continue up, right? And that's the larger order flow we're going to have to look at. So that's the difference between when you've got the large internal structure and then the smaller internal structure, or in this case, right, the fractal, because that's basically what we're looking at for chalk. Okay, so what we can do is obviously look for shorts within here, because we've had a sweep of liquidity, we've pulled back into the premium, we've pulled back into the previous supply range. There's every potential that the lower high could form, right? We're trading pro trend. We've had a nice wick reaction. This is on Frankfurt Open, 7 a.m. London time. But if we're looking for shorts, we just have to anticipate and manage our expectations of what we think can happen, that it could just be a pullback into these levels. We've got some nice refined supply within here, right, to then continue up. So that's literally all it is. I mean, you guys should be familiar with it anyway if you've watched that previous content, because it's the exact same thing, except this time we're just drawing boxes on, which can kind of help just to visualize it sometimes. So even here, and this is what I was saying, right, even this is this low here, it's slightly more convincing than the fractal low. So this is where I'd say this is like the larger internal structure, right? And then you've got the smaller internal structure, right? And that could just be that movement there to then switch bullish. And then you've also got, you know, the actual fractal, which is like looking at the candlesticks. So at this point, that's a bit more convincing. So yeah, again, you can look from shorts within here, but just be aware that it could have just been to pull back into here. So let's play it forward, and then it can, gets a bit volatile, and then we continue up, right? So that's where then I would view that as the continuation of the larger bullish internal structure, and we're moving up higher. So now we're coming into kind of extreme refined zones. So this is what I was saying as well in the notes, if you've hopefully read those, was that just like a lot of these concepts, especially, you know, like chalk, we want to be using them in areas that are higher probability that we expect price to shift. Because although we had a pullback here, we had a sweep of liquidity, it was into the premium of the swing range, it mitigated the price swing range, it's Frankfurt open, we had a bearish chalk, all right, nice little bit of momentum. If that price action happened up here, right, it would be a lot higher probability. So that can give full signals, and that's why we still want to pair it with all of the confidence we've had. It's not just a case of, oh, well, now the bullish order flow is being disrupted, now we're just going to expect this to go, right? So yeah, you guys should know that anyway. So we're coming into here, and obviously we can drop down to the M1, look for our entries, blah, 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 blah. It's not about that. This is more just about understanding the framework in which we can use to aid our decision making. Because at this point here, let's say we're waiting for an M15 change of character, which would be this level. Although that can still be that signal that the swing pullback is over, we know now that this, I should probably be drawing these on just a bit slower just so we can keep track of this. So this is the M15 IBOS, right? So I'm kind of viewing that as the larger structure. So again, just to make sure we're all on the same page here, push down, internal push up, internal push down, internal leg up, internal pullback, and then that internal leg. So that's the next IBOS there, that's slightly larger internal structure. So if we were to get this change of character here, it could just be what? In fact, let me use some nice lines that I've got so we can even keep track of it even more. That could be, that's the strong internal low, right? And then this would be our weak, too many templates here now. Yeah, weak internal high, right? So this is what I mean by the internal structure. So again, if this helps you in live market as well, obviously it's going to be a bit slow on your back testing, but you can make all of these little templates so you kind of know where you're at. So I have a bigger dot, say, for your swing structure, and then you can have like smaller dots for your internal structure, so you can keep kind of tracks of what you're doing. So at this point, we've come into extreme supply, and we can look for shorts in M1, etc., etc. If we now get a change of character, which we now have, that's the first signal that we could be getting that pullback, but it's not until this low goes, this strong internal low, that we get that bearish IBOS, that then I would say that we have really good confirmation that we're going to take out that low, and what do we expect? That we expect those large internal ranges to hold, okay? And this is the way you can map your charts in live market, which really may help you to kind of visualize what's going on. Because at this point, very easy, right? We could expect or anticipate that price might come into some demand within here and push up higher. But what you also have to remember, like I keep saying, is swing structure is king, right? That's the strongest one. So, you know, although whilst you can still look for longs from within here, you can't then be surprised as to why it then fails, okay? So here we failed, so now I would get a candle closure, which is obviously key if you follow the same rules as me, because I need a candle closure for an IBOS. And then that is now, it was a weak, but now it's become strong because it's done its job. It took out the internal low. So this becomes your M15 strong internal low, right? So now we have had the break of this bullish order flow. What do we now have? We now have a bearish internal range. So from the low to the high, drag it across to where it's broken. And this becomes our M15. Supply range. Okay, so now what we can do is we can look for shorts to anticipate that these internal ranges will hold, that this supply range will not be breached, that this strong internal high will not be breached, and we can look to take out the weak swing low. Because what's the framework? Now the internal structure has aligned with the swing structure, right? We've now had that pullback, and now we switch bearish, so now we can take out this swing low. And that's it, and that's, you know, I don't know, that's as simple as I'm trying to keep it, as I think we should all try and keep it. Obviously, we can start to bring this lows into lower time frames, and there can be a lot more complex situations when we get bigger and bigger ranges. But I think this piece of price action is just a very good example, you know, of really what we're trying to do here. Okay, so then we get another internal breaker structure here. So then at this point, let's get these on. I know it's a little bit slow to draw it all on, but I think it's really useful to do. And then we have another supply range, right? So what do we get? We got initiation, pull back into that prior range, so mitigation, and then continuation. And that gives us another supply range, right? And as we know in the previous one, we didn't get a break and closure below, so that wasn't a swing boss. And then we start to retrace aggressively. So obviously that's pretty strong bullish confluence that maybe we're gonna, have a decent retrace here. But what is the framework that we're using with internal structure, which can really help us, right? In this situation, well, let's see. So what we were saying is that obviously you need to move this down when we get to the new internal range. So that becomes our strong internal high. And that stays because that high did do its job from an internal structure perspective. So although we know it's pretty bullish that we've swept here and we're chasing quite aggressively, we don't assume this high is weak yet because it did its job. Okay, so then this would be your M15 weak internal low. All right, and then you can use that little dot there, right? And that would be the framework we're using. And you can look for shorts within here. This is the point I was trying to make earlier. You don't have to. Although that's our rule and we expect this low, this high to hold, you still have to bring in all of that other confluence and make a probability-based decision. So what I mean by that is that we have a framework to define that this is strong, but that doesn't mean that it's going to hold and we're going to trade from it because we failed to take out the swing low. And you should know from previous videos as well, we've come into a big extreme monthly level and we're potentially expecting that monthly pullback to happen, right? So when price then comes up and then it actually breaks that high, this is then your bullish IBOS. So now when we have that IBOS, this then becomes weak, right? Because this section of price action was bearish. It's now been disrupted. It's bullish. So now we expect the internal structure to stay bullish until it takes out that high there. Okay. So at this point, the swing structure could still stay bearish because we haven't had a break below. So this is still a strong high. But at this point, this would be the framework we're working within. So the M15 swing is still bearish. The internal structure has now switched bullish. Okay. So now from an order flow perspective, from the high to the low, drag it across to where it's broken, we now have what? We now have demand is in control from the internal structure, okay? So now we'd expect this high to be going and we'd expect the green ranges to hold until it doesn't, okay? So now this low was weak, but because it then took out the high, it becomes strong. So that's our strong internal low, and we can look for potentially for longs from within here. So expect price to potentially pull back down into the range, okay? So this is our weak internal high. Cool. And then let's put our little dot on there. So this is what I was saying right earlier. If you're just looking at swing structure, again, there's nothing wrong with that. Shorts are pro trend. We've come into this potential M15 supply chain here, and you could look for shorts and they could play out. But you have to expect what? You have to expect if you take any shorts from within here, that it could be just an internal pullback to mitigate this range because this is our strong internal low. That would be our weak internal high. So those shorts here are pro swing trend. You just want to manage your expectations. It might be a pullback into this demand range for then an internal high to continue, right? And that's, literally how we're using it. There's not really too much else for me to add to that really. So let's try and kind of concentrate just on the internal structure here and speed this up a little bit as best as I can. So let's move along. So remember for IBOS, we need a break and closure. And this is where order flow then can get a little bit messier at times because for order flow, I pretty much just use a spike through, okay? The same way with supply and demand zones. So for me, if you draw it from the high to the low of the range, I know what we do. We drag it across to where price breaks out of it. It breaks out to the upside. So that would be your medium time frame, so M15 demand range, right? But we haven't had a boss yet, okay? We haven't had an IBOS yet. So let's move this along, okay? And then we get a break to the downside. So this is why order flow it gets a bit messy, and I'll show you why in a minute as this plays out, and why I would pay more attention to the structure because now we've got a break out of that. It broke the low here, so that would be your actual supply range now. And let me just drag in this across to keep it nice and neat. All right, so now you could go, okay, well, actually the order flow shifted from bullish to bearish because the low broke, but structure hasn't. The internal structure is still bullish because we haven't had a boss yet. So this is still the strong internal low, right? And this is still the strong internal high. So that's why order flow is a little bit messier, and I'd pay more attention to structure first in this instance. And why this is literally just, well, this is where you have to use a little bit of nuance to go, really, we're just moving sideways, okay? We're pulling back into essentially this range here, and I'd be more, cognizant of the fact that M15 internal low could be forming, right? So let's move this forward a little bit. And this is where you can make this framework complex as well, because within that larger supply range, which we have here, so there's from an order flow perspective, this is where you could potentially expect that. But from an internal structure perspective, remember this is the range we're working within. But then from within there, this is where it gets messy, right? So don't worry about this too much. But essentially, you get a bullish chock after sweeping these lows. And then if you look at the little supply range within here, what happens then? That then switches bullish. Okay, so now you could say that's realigned itself with the larger bullish structure. Make that demand range, and then you can look for longs from within here to target the weak internal high. So let's see what happens. Price comes in, and then we go, and then we get the IBOS. All right. Now we still have to be wary that the swing structure is bearish and we're coming up into the extreme, but so far the internal structure has stayed bullish. So our strong internal low now becomes here. All right, again, use the dots if it helps you to keep track of it all. Okay, and we're moving up. So now every time you get a break of structure, this is another way that can help you. Say yourself we've got a new range, right? Just like we'd have a new structural range. Well, now we have a new supply and demand range. So you can always think whenever there's a break, you can draw a new box on. So I'm going to tidy this up a little bit just so we can keep it a bit more simple. But essentially, if you were to draw from the previous range, so from the previous internal high down to the previous internal low, right? That's the new internal range we have. So remember from the previous one, that was the previous internal high, that was the previous internal low, drag it across to where it's broken. So when we got that bullish IBOS, what did we expect? Whoops. We expected an internal pullback into that level, which is what we got. And now we've got another IBOS, right? So this is where you can clean up. Before we had kind of messy order flow within here, but now we know that this really was the kind of true internal range that we're working within. And now we've had another break to the upside. So now what we'd expect, we get the initiation out of that range, and we'd potentially expect another pullback into that. From an internal structure perspective, this is a strong internal low because it did its job. It took out the high. So from an internal structures perspective, we just could expect a pullback into here, and we just expect that to continue. But obviously using more confluence, we have to be aware that the swing trend is bearish. We're coming into that strong high. So potentially, right, if we get movement like this, we could get in short to try and anticipate that this is going to break and we're going to take out that low, right? So we got that break in here. We could look for a short within here. But as we're coming into this low, that's where it's getting lower and lower probability to be trying to short into it. Because first you want to see maybe, is this going to hold? Because price could, let's see, price could do this, right? We could get short up here, which is most ideal because then we can remove our risk, because by the time we're then trading into the strong internal low, what could happen? Price could then do that, and then we know it's likely this low is going to hold, and then we'd expect those smaller bullish internal ranges to hold until that weak high goes. Whereas if we got in here and then this movement broke, okay, now you can start to look to scale in or look for shorts, if you're not already in, because now what would have happened? Now you would have had that bearish IBOS. The larger internal structure has then shifted bearish. So then we would have from that low to that high, we would have what? We would have a supply range, and then we would expect those supply ranges to hold until what? Until it takes out the swing low, right? Hopefully that makes sense, but let's see what happens and we can go through price action, because sometimes it's a bit easier to see those real world examples, and then we'll probably wrap it up there because you guys should hopefully be starting to get the hang of it. Okay, so what I was saying, we've had that bullish IBOS. We now know this is our strong internal low, but we're obviously wary that we're coming into a strong internal high. So this is where, just on one time frame alone as well, the swing structure and internal structure are misaligned, right? But this can really help us, like we said, to be more aggressive and potentially get in trades where we previously wouldn't, because if we were looking for longs from, say, if price pulls back into this demand, right, we would go, well, we're buying in the premium, we're buying against M15 trend, so maybe that's not high probability enough. And you still may think that, and there's some circumstances in which that will be the case, right? So this is where you as a trader needs to decide what meets your risk appetite, your tolerance, and obviously judging it in the overall picture as well with other confluence that we want to bring in from other time frames, okay? Now at this point, right, yes, we've had a bit of a push down and a bit of a push up, but this is where, you need to really, and this is why it's a bit more advanced, remember, have that nuance between the larger internal structure and sometimes when you get the smaller internal structure as well. So what do I mean by that? Well, I mean, we've got this one big push up because it's all relative to the previous price action. That's what can really help you, right? Rather than pit pulls, just look at where we are and look at what the swings look like. Here you can see these are all pretty much the kind of same size swings, right? So that's what I would call the larger internal structure. So then from just purely the internal structures perspective, we would expect that. But what do we have within that? Well, we could have, choose green, right? The smaller swings, which we know makes up the larger swings because price is fractal. So if we come up here and then we were to get that, right? Yes, I would still label that as an IBOS, but it's essentially the smaller IBOS. So for me, that would just signal a pullback down into this strong internal low. So then if the green small structure turned bullish and we got that small internal order flow shifting bullish again, right? And then that would align itself with the overall larger orange internal structure. And then we would expect that, right? Again, we've covered that in the advanced market structure module, so you should be pretty comfortable with that. But let's use order flow, right? Because that's what we're trying to visualize here. So as I would draw this on, showing the order flow continuing, coming up into this level, I would still be wary of the larger order flow. So we get range initiation, mitigation. Are we going to get a continuation? Let's see. So we pull back into it. All right, and this is what I mean. If anyone's trying to get in short here, right, traders, because you might get, you might come into an extreme wick, right? We've got M15 supply. We might get an M1 entry model within here, and that's absolutely fine, right? We can get in short. We don't have to wait for everything to change. We don't have to wait for M15 chalks. We know that, okay? But let's say you get the M1 entry model, and it doesn't tag you in straight away. Price gives the M1 chalk, etc., but it just pushes straight down. It doesn't tag you in, right? Now what's happened? If you understand order flow, and you've seen that price has now pulled into this green demand, and now it's going back up to you, now you have more information to make a better informed decision. Can you short from here? Yes, of course you still can. This is a weak internal high, so it's lower probability, but obviously it could play out. But what you might want, rather than just whacking on or leaving on your order in here, risk entry, let's say, you might want to wait for another confirmation entry to form from in here to give you more confidence that this high is going to hold. Or you might want to go, well, actually, I didn't get tagged in initially. Price has pushed down into demand. It looks like that internal order flow is going to continue. So I don't want to trade from this weak high. I'm going to wait for price to shift before I want to do that, right? So that we continue up, we take out that weak internal high. Now let's see what happens next. We just break the swing high by about a pip, but we don't have a closure above. So that is not a swing boss, okay? But we did create another demand range, right? Cool. So let's wait for that to see if it will be disrupted. Okay, now it's been disrupted. So now we can draw from the low to the high. And now what do we have? Now we have our supply range because we just need a wick break for, whoops, wrong one. Now drag this in, okay. So now you have a lot more confidence compared to trying to short from this high. We understand that this was weak. We understand that the small internal order flow was still bullish. And now it's shifted bearish, okay? So now you can look for shorts from within here. And that's a lot higher probability than when we're trying to short from here. Also, we've had the sweep, which helps as well. The sweep of external range liquidity, tap into that level, right? And then we can look for shorts, anticipating that potentially what? That we can take out the weak swing low. But what do we know as well? We have to pay attention to the larger internal structure because it's only once we get that boss there, that bearish boss, that's when we have the strongest confirmation that the pullback is now over. And now we can target this low here, right? Because this is the larger green trend. And it's only once that fails that then the start of that trend, the start of that leg, then becomes weak, okay? So yes, whilst we had the smaller internal order flow within here, right, which then shifted bearish, and that gave us a higher probability short, and we can anticipate this level. We don't want to be holding on really full volume or swinging for the fences, right? Because we understand that this may have shifted bearish just to facilitate the pullback into this strong low, right? So we have another range. And again, this is where we can look for shorts from within here, but we have to be aware of what I was saying. The nearer we get to this low, this strong internal low, the lower probability shorts can become. You can still trade them, they can still play out, but it's just about having that information, understanding that yourself as a trader, right? And making that informed decision. And then we continue bearish again, all right? So range, initiation, mitigation, continuation, and it gives us another internal supply range. So this is what I was saying. If you haven't got in here, and if you didn't get in here, you might be wanting to chase it and get in here. Yes, it could play out, but we've had a strong reaction from this extreme of a strong internal low. So if this movement is going to continue, this is where it's going to continue from. So do you want to short from within here? I can't tell you yes or no. That's down to you to make the decision. But now you should hopefully understand why this is much lower probability than here, right? Than these two first opportunities. So this is where I'd personally probably want to stay in my hands and wait and see what's going to happen next in terms of shorts. I'd rather see that movement come down then that would be an internal boss, right? So then this would become our strong internal high at that point, right? If we got that boss. And like I was saying before, then we would have this new internal supply range, right? And then we would wait for what? We would wait for potentially the, let's use greens that can help, right? The small order flow to shift bullish, come back into this range, then we'd wait for it to shift bearish, right? Whether that's a chock or a smaller IBOS, and then wait for that order flow to be disrupted, right? And then we'd expect those ranges to hold until that low goes. And then what would that be? Just gonna keep going over this. That would be that larger orange internal structure, right? So then we'd have a movement down, and then the exact same thing would repeat, right? Exact same shit all over again, excuse my French. All right, but you guys should be familiar with this from multi-time frame analysis. It's all the same thing, and then we take out that low eventually, right? That would be the idea. But we're just drawing on these boxes to visualize that. Okay, cool. So let's get back to where we actually are. So at this point, for longs, definitely can look for longs from within here. But again, you have to accept the risk. You're trading with the large internal structure from a strong low, but against swing structure. So not telling you should trade from there, shouldn't. It's just, I'm trying to give you the information and the framework for you to make better informed decisions compared to maybe the information and concepts we used before, right? Okay, so let's see, because this could easily hold, right? This order flow could easily hold. Bearish order flow in terms of the smaller is still intact because we have the large order flow is bullish, but the smaller order flow is still bearish. So this is a good point to make, right? Once this high goes, or if it goes, that would be the smaller internal structure break, which would then give us confirmation that now we're ready to take out this high, right? Because this is the larger structure, we expect that. But then within that, I know I keep going over it, I know some of you are rolling your eyes right now, but I'm just gonna keep doing it. But then we had this smaller green internal structure, let's say, then that shifted bearish, we got the bearish order flow to facilitate the larger orange pullback. So yes, if we got like a little choke or even M1 within here, that could be the first sign that this low is holding and we could take out this high, but it's only once we get the break of that nearest smaller internal structure, so that small IBOS, now everything's aligned, and now if we got to pull back in, that would be nice high probability trade, right, to then target this week high and potentially beyond. All right, so if the penny hasn't dropped, hopefully it's starting to now, okay? So what do we get? A break of that order flow. We also get, a little bullish IBOS. You might also want to, use IBOSes for that as well. And now this is where then you can look for longs to target that week high potentially, because we went from that bearish order flow to bullish order flow here. So from the high to the low, drag it across to where it broke, right? And then that's your new range, and you've got even smaller ranges within there, okay? Fractal range. So price pulls back into there and then continues, right? And then we get another range. And then don't quite close above that yet. And then we get it. So we also get a swing breaker structure. So now the M15 has switched bullish. So that becomes your breaker structure. That becomes your new strong internal low, right? So on and so forth. And you can map all these out with your little dots, right? So that was the larger internal high. That's the larger internal low. And like I said, what happens when you get, every time you get a breaker structure like that, so we've had the internal boss there, the larger internal boss when we broke this high. So what does that give us? That gives us another internal range, right? So from the high to the low. So now what we'd expect, potentially doesn't have to, but price could pull back into here to continue what? To continue that larger internal range. I'll just change that to orange just to kind of try and be consistent with what we were saying, right? If it will change for me, there we go. That's what we'd expect. We've also had a swing breaker structure. So now, if we zoom out a bit, we draw from the swing high down to the swing low, will actually be the lowest point, right? That then went to break on that high. That's our new swing range that we've got on the M15, right? So yeah, and that's basically it. And that's the same format that you then apply to every single time frame. So do we pull back into that range or not? Don't quite, but we obviously, that we don't have to, and we get another range here, right? So on and so forth. Just play this out a little bit and we'll see how we go. So yeah, I kind of want to leave that because I didn't want this to be a super long video, but I think I've been going pretty long already. I didn't quite go into multi-time frames as much as kind of I initially planned, but I will do obviously more content on this as we go. I think what we have so far should be more than enough for you guys to really, absorb this, digest it. And for me, the key is if you guys can understand like the laws, like the rules, the framework, in my opinion, the rules are very, very, very simple. It's everything we've always used. It's knowing that you have three types of structure: swing, internal, and fractal. Obviously, there can be a bit more complicated scenarios where you can always have large internal and small internal and fractal as well, but it's still the same hierarchy, right? You should know that swing's the strongest, then your larger internal, then your smaller internal, which was these swings within here. And I mean, that's basically your fractal as well, right? Where you'd map on chalk. And you understand what weak and swing highs and lows are. A strong high or low is one that breaks a high or low. So for this to be, the reason why this became a strong internal low was because it took out an internal high, right? The reason why this becomes a strong swing low is because it eventually takes out the strong swing high. But until that happens, obviously this low is weak the whole time. But once that happens, and then we now call it strong, right? And we want to be trading, always we want to be trading from strong structure to weak structure. But there will be times like there was over here where price is coming into this strong internal low, right? And we want to be trading from strong lows, right? So we could get long from here and target the weak internal high. But obviously that's against swing structure because the swing structure was bearish and we're trading into a strong swing high, right? So that's where it's just misaligned. It's just not as high probability. But that's where you as a trader has to decide, do you want to do that or not? Is there enough confluence? What about the other time frames? What are they doing? Because we'd come into a monthly level, we'd had a big sweep of 4-hour liquidity, et cetera, et cetera. Maybe you're the type of trader who is always happy to kind of follow the internal structure. You're aware of the swing structure, but you're happy to keep following it until it changes. And if you take a loss here, so be it. Then you would have had the bearish IBOS, and then you can look for the shorts to take out the swing low, right? It's all going to depend on your risk appetite. Also, how big is this internal range? Like, do you have enough risk to reward? Because if you're entering, let's say, with a 2-pip stop, maybe there's only 3R up to this next level. Maybe you don't like that. Whereas maybe if there's 10R up into this level, then you can, that's the risk to reward that's acceptable to you, because then if this small bearish internal order flow holds, but you've already got in long, you've already removed risk, you've already maybe taken some profits, and then this small bearish order flow continues and the swing trend takes over, well, then you're happy, right? They're the decisions as a trader you have to make yourself. But yeah, so I would advise, even though you've probably maybe watched it 3 times already, keep going back through this entire advanced structure, advanced technical analysis module. Go back through the structure videos, especially now we've gone through this. I guarantee you'll pick up on more stuff. Keep doing it literally every month. Go back through the videos. But yeah, the point I was really, really trying to make with this rant at the end is if you can have on paper and understand the laws here, right? The hierarchy of structure, trading from strong structure to weak structure, and knowing that any change of character signals the start of an internal pullback. All right, so let's draw this quickly and we'll end it on this note. So, well, I don't really want to do it because it's going to take me ages to draw it out properly. You guys have the annotated diagrams, right? So that's exactly what I'm trying to get on here. We'll just do it with the price action we've got. So we know that a change of character here, all that signals is the start of the internal pullback, right? Into this low here. It's only once we get the internal boss that signals the end of the swing pullback and the start of the new swing run, right? So chalk signals the start and end of internal pullbacks. Internal breaks of structure signals the start and end of swing pullbacks. Okay, so what about a small IBOS, right? The smaller internal structure. Well, that just signals the start of the larger internal IBOS because it's the hierarchy of structure. So yeah, if you can get familiar with that and you understand the laws, then kind of no matter how complex scenarios we can get into, if we get to kind of the current price action where price was ranging for a bit and it was, within here, and especially when you go through all the different time frames and you can have everything quite misaligned, as long as you understand these rules, and maybe it can be very helpful for you guys to kind of, come up with a nice color coding system with your templates and always have, in your live market, where your strong internal low is, where your weak internal high is, where your strong swing high is and your strong swing low is, that can really help you a lot. But if it's all conflicting, it's all confusing, risk reward isn't there, you do not have to trade it. Just because you can potentially have a framework to anticipate what you expect to happen doesn't mean you should be risking your capital on that, right? And that's one thing I'd point that's very, very hard. It's hard for me as well because you want to get a return on your time invested. You've got up early, maybe you've got a job, you want to escape from that job, you want to make money, you need to make X percentage to meet X goal to get funded or to tell your significant other one that you are doing well. All this shit that goes through your head, or whether it's just, I got up, I want to trade, I want to be active, I want to make money, as simple as it is, like that, we all have that urge. And then when you have a framework and you're sitting there saying to yourself out loud, well, this is a strong low. I expect it to hold. This is now aligned. I expect price to do that. You can almost talk yourself into a trade. Okay. So it's not the end of the world, but I would say when you're learning these concepts, I would spend weeks, if not, a little good while, months, just practicing doing what I just said. Literally just label it, say your expectations out loud or write them on the chart, and just get very comfortable with seeing it play out over and over again. Then you'll start to get a very, it's that sixth sense of which POIs are going to hold, how big of a reaction is it likely to give? Is that the type of trade I want to go? And that's why it takes the majority of people quite long to get to that consistently profitable stage, because anyone can learn the technicals. You don't need to know any of these technicals to be very profitable. That's what you literally say at the start of the course. Just take the M15 time frame, just follow pro M15 trend from the extremes, and over the course of a year, you will be profitable. But it's when you want to take it to that next level that, yes, you can smash through this content in a month and you can test it and maybe have it down, but it's only when you've seen tons and tons and tons of real life examples and you've traded through them and you've really paid attention to it all, that's when you can actually actually trade profitably and consistently for a long time. Because when you're blasting through it, back testing, and you're playing a bar replay, it's all very, very quick. You're not dealing with how price is then pulling back when you're in the position and emotionally what it's going to mean for you and all these things. I'm going on a bit of a tangent here. What I'll end up with is just work on one time frame. If you smash through this content, just take the M15 or whatever, and just literally draw it all on like I just have for the last 20 minutes, half an hour. Then slowly maybe bring in one other time frame, and just get used to it. And just focus on, say, the swing and the large internal structure. Maybe don't get too caught up with the smaller, because that's when it can get very, very confusing. And just go from there. We'll take it step by step, obviously with the whole community starting to absorb these sort of, slightly more advanced way of looking at price. And obviously I'm sure we'll refine this even better, and we'll turn it even to a more simplified and refined concept as well for us to use, and we'll find better ways to teach and convey the topics. And we will do some more examples, obviously really drilling in from top down all the way into entries and then management. That sort of content will be coming, but for now I think you guys have got more than enough content to take away, and just test it yourself, have fun with it. You don't need to do bar replay, literally just zoom out and just practice on one time frame, just trying to do multi-time frame analysis with just one time frame, looking at the bigger swings, right? Knowing that this whole range, this here is going to be what? That's going to be your 4-hour internal range, because this is here. This is your 4-hour swing structure. So that's the 4-hour bearish range. So you can put on your higher time frame supply. Whoops. Let me try and get it right. There we go. And you would have that as your 4-hour swing high. Draw it all on, take your time, I'm not gonna do it all now. Right, and then you can go, okay, well, we're expecting that to come in, and then you would obviously have all the M15 switching bearish, and it switches bullish, and then it breaks to the upside. But that although we're coming into the 4-hour strong swing high, what's the 4-hour internal structure doing? The 4-hour internal structure is bullish. So we're coming into extreme 4-hour supply, right? Maybe the M15 switches bearish, and then we can look for some shorts within here, right? And that could be the move that then went on to take out the weak 4-hour swing low. But because we understand internal structure, and we understand that the 4-hour internal structure is bullish at the moment, it's bullish order flow on the 4-hour chart, that although we get short, at any moment, that could just be to mitigate the 4-hour internal demand to then continue to the upside. So then if we zoom into the M15, right, and then we start to get those breaks of structure and disruption of the order flow in the M15, and then that order flow holds, we can start to look for longs to potentially anticipate that we're going to take out that weak 4-hour internal high, right? And then that would be your 4-hour next internal demand range, right? And that'll be it. I don't know if that's going to show up on the 4H or not. Let's have a quick look. No, just the drawings did. But yeah, I'll just quickly go over that again so you guys can see what I was talking about. But essentially, right, that would be at this point in time, 4-hour would have been bearish. We were coming up into extreme supply. But if we look at the large internal structure, what was it doing? It was still bullish. So although we can take shorts from within here, as it's pulling into this range, we have to anticipate that this is a strong 4-hour internal low that could hold. Range, initiation, mitigation, continuation, and then we end up switching bullish, right? So yeah, I'll leave that there. A lot for you guys to digest and take in. I'm excited to hear your feedback and see how I get on with it. And yeah, enjoy.